Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. Joining me live in studio in Naples, Florida, our senior economist, Tracy Shuchart, Shy Girl. And of course, on the East Coast in Charleston, living the dream, as I always say. He always looks so relaxed every morning, right? I mean, what are you up like 2 hours before we even get going? He's working out. He's doing everything. Our senior market strategist, Jim Cagnina, Cags. Good morning, Jimmy.
Good morning. Second day in a row out on the road,
Jimmy yet,
running my laps around the subdivision.
For me, right now, markets are muted. The biggest news I've got overnight as I looked at the screens was copper.
Yeah, absolutely. So what happened, of course, at 9 p.m. this happens. It seems that tariffs on copper are going to be coming sooner than they initially thought. Back in February, they said they were going to hold a review. It was going to be 270 days. That means that would put copper tariffs coming into fruition between September and November is what most analysts were looking at. And now it seems it's coming in weeks. So we had this huge spike in copper overnight, all-time highs. We have since come back down a little, but again, it's tariffs that are dominating the news cycle.
Yeah, I mean, yesterday we talked about it. It's all Trump, Trump, Trump. But we had data. It didn't really do much to the markets. And ultimately, the day was really pretty quiet. And today probably could be a very similar situation. When I look at really the overnight session, it is as muted as a session that I have seen in a long time. And I got to tell you, it's amazing how quickly the environments change. Right? I mean, now it's all about commodities, which is good for the futures world.
Right.
The traders, you should be looking at more commodities.
Exactly. That's what I was going to say. Commodities are moving right now, guys. Check them out.
I know that you guys during hot commodities have been covering quite a bit. And Jimmy, I know we've got your audio now. I mean, what did you see overnight? I mean, the only thing I see on the chart that he's got a percentage more than 0.5% is copper.
Yeah, no, I don't know if you guys saw this. Brent the Black Lion on Twitter this morning's going, we're going to get a special announcement probably out of the White House about copper. We're going to do something special about copper. It's going to be so special. Yeah, everybody's going to love it. So I thought there was a great comment on his part, and that is very likely. But yeah, I mean, that's the only thing that's moving. Everything else is in a really super tight range. It's kind of spooky.
Well, yeah. We do have a crude slightly up this morning. What happened yesterday is Trump was talking about a maritime ceasefire between Ukraine and Russia, which really is more about ags than anything. But we did see a pullback in oil yesterday when that came. I think the market was kind of misreading that because it really was all about agriculture because there hasn't been any transit stopped in the Black Sea for oil inventories, but API crappy came out last night. And what a wild swing from last week. Last week they said it was plus 4.6 million barrels, and this week they say it's minus 4.6 million barrels. So we do have crude inventories coming up at 10:30. We'll see what EIA says, but crude is kind of getting a boost because of that draw that API reported last night.
Yeah, no, and we've talked about this. You know, we laugh about it. API, she calls it crap EI because it's voluntary, right?
Yeah.
Not everyone has to do this.
Right. It's a voluntary reporting as opposed to EIA, which is mandatory reporting. So often you see wide swings between the two numbers, and people ask about that a lot, but so that's exactly why.
So we've got the data up today. So we've got two red folder numbers. We got durable goods and we've got crude inventories, right? I mean, durable goods will be on this morning.
Yep.
Obviously, crude, we expect some movement, especially with the overnight stuff and the tariff talk. Is durable goods, any expectations there for a market mover?
Expectations, there are 0.2%. So we'll see.
Yeah. I'm not expecting a lot out of equities again today. We'll get to the charts later. You know, another big lineup. We've got Pharm this morning for our chart session, followed by Tanya, as we do every day. And then we got Kane. Kane will be in the house today. Jimmy, yesterday you had Leo on. I thought that was great. You know, a lot of that stuff I didn't know about Leo.
He's a very interesting person for sure. You know, when I learned about the tornado chasing, I
I
couldn't
mean, that
believe
was
it.
unbelievable.
He sent me a video. I don't think I sent it to you guys. He sent me the video of him in the car, like right, just like you'd see on, you know, the movie Twisters. It was crazy.
I mean, he says if I'm not mistaken, I was listening to it in the background, and he said that he chased the largest tornado in history, or is that what it was? Was that, am I accurate on that?
Yeah, it was supposedly it was a 2 mile wide touch at the bottom, right? A 2 mile wide.
Leo.
Could you imagine that?
No,
I mean,
I
Anthony,
couldn't.
that would just
I go to the
that would rip
opposite
off
way.
the lanai. You would be looking for your lanai somewhere in the middle of the Gulf of Mexico.
My hair might get messed up during that windstorm. There's a strong possibility. It's very possible. I've made it through hurricanes, but I don't think I can make it through a tornado like that. Well, good morning, chat. Also, as well, we see a lot of people in there. Good morning, Pax. Pax is in chat. How are you guys feeling this morning? You know, talk to us. Not a ton going on. Of course, we're going to get through all the charts and everything right now. Let us know if you're seeing something out there right now in the markets that you think is of note. And I agree, you know, people are even talking about the markets are really just recovering right now from this latest move. I mean, we're digesting a lot. I mean, last week we go back to it. Rollover finished, you know, with triple witching, we had FOMC, we've had all these different things. And at this point now, the market environment shifted again. You know, Pharm and I talked about this yesterday, and you know, equities are taking a breather. I don't know, you got to.
Yeah, it's kind of hurry up and wait for tariffs, it seems like. We're still hanging right around that 50% retrace from the recent high and low. So see what they do. But it seems like with all the headlines that came out yesterday evening about tariffs on copper and just tariffs in general, it seems like markets are just taking a breather.
Yeah, and you know, also something to note, and I'll talk about it in my charting segment with Pharm later, is, you know, 10-year couldn't break out of that little, you know, sideways move it's been in. It's still stuck at 4.3%. When I look at everything across the board, and I don't know how you feel about this, Jimmy, just from, you know, 10,000 foot view, when I look at it, again, we've talked about this low, and this was something I want to talk to you about with Leo, but we'll get to that in a second. When you look at, again, what today brings, it's another environment where, unless there's a major headline, which is durable goods, I doubt it's going to do much, right? Copper's already made a higher high. We know that. You know, crude oil's up a little bit. Equities have not moved off of it. Unless there's a headline today, it's another probably sideways two-way tape, potential grinder higher. This market is just, it's amazing how different it is from what we were just a week ago. And I think this environment really is feeding it. And people maybe don't want to adjust to it, but you have to, because this is what it is now.
Yeah, even the sorry about that. But even the Bitcoin futures is like stuck in the mud. I mean, I haven't seen this before, where literally this is our market that moves, you know, 5 to 8% every day, and it's just kind of sitting there with a really small daily range today, and it's a little bit startling to me. So I think there's definitely some anticipation. Keep our hands in our pocket from the bigger institutional involvement, and let's see how this all plays out.
Yeah, no, I 100% agree. You know, and I think, you know, people got to think about the markets from a psychology standpoint as well, right? You have the beginning of the year, we had a new administration. We're coming off of a massive year from last year. Everyone was anticipating a lot of volatility and really a two-way tape. We got that, right? You know, we had a little move higher. We had a move lower now. And now everyone's looking at it. And I think when you just put it into a simple perspective, which is what I try to do, because I don't try to complicate anything in this business. you look at the market and you go, it's made a decent range for the year. I mean, that's the bottom line. It doesn't necessarily mean that the highs or lows are in, but once a range is made, people aren't too enthusiastic about putting risk on in the middle of this area now. I think that's what it comes down to. It's not necessarily that, that's why it's hard to stay busy for so long. I mean, this is why I talk about it all the time. The indexes aren't in play every day. And what I mean by that is that you go through cycles throughout the year, right? The market searches for a high. It searches for a low. It makes a high. It makes a low. We come off of a low. And this is what I wanted to get to you next, is I just kind of talked about that with Leo. And I agreed with when Leo was talking about how we were talking about, in the morning sessions, whether or not we had a good low, and everyone was kind of looking at that. And in the context that Leo put that in terms of awareness for a short-term day trader, I think was spot on. I mean, for me, I'm not trading off of that low, but the fact that I think that there's a decent low made, to me, what happens is in markets, and I've noticed this for many years is doing this, is that the market just shifts its head, right? When it's searching for a low, it stays on the low, right? It stays searching for it. And once the market spends a little bit of time coming off of a low, like it spent a little bit of a consolidation period, and now it shifts its head and it goes, well, maybe that low is made, and then the environment changes. And so then it starts to look higher. And that's why we get these one-dimensional markets a lot, right? Because markets search for highs and lows, and once they're made, this is what you get. And this is the difficult thing, I think, for traders to understand this in the moment as lows and highs are being made, because if we just keep going in one direction and you're like, gosh, you day traders trying to fade it, and then all of a sudden it finally, it just keeps going in that direction, makes that high, and then it's just one-dimensional the other way, and now we're potentially one-dimensional back up. I don't think that's going to be the case. I do think that we probably have more to go higher, but I just think that what's important to understand is when you have a decent high or low on the higher time frame, that changes the game intraday. And so it doesn't mean as an intraday trader you have to trade off of that high or low, which I've been talking about, with Pharm and Tanya and everybody throughout the week. It's just understanding the psychology shift in the marketplace is that once a high and low is made and we are potentially in a range, in a bigger range, that you have to adjust for that. I think that's really important. And that's really what I tried to feed every morning with everybody, is understanding market environment, because at the end of the day, that's all we could do is, everybody, all of you guys out there in chat and have your own strategies, and it's just understanding just these different environment shifts. And like I said before, if we help you just keep you out of more bad trades, if that's the best thing we do or worst thing we do, however you want to look at it, that's a great thing, because understanding how to become a better executor of your own strategy in different market environments is what puts you to the next level. That's the key. Go ahead, Shai.
Sometimes that's easier when you have a slower moving market, right, than a faster moving market. So I think traders should, if we have a slower moving market, take advantage of that, and to, test your strategies more.
Yeah. And that's the other thing too, is like when I look at different market environments, we talk about different position sizing, right? When it's more volatile, I'm trading a little bit smaller with a wider stop. We talked about this with Tanya. We talked about this, Amir talks about this. The busier that a market gets, you're adjusting for that. When it gets slower, you could trade a little bit bigger because you're still risking the same, but your stop is tighter now. And people think that if they're consistently trading the same contract size every day, that they're being consistent, but they're not, because the market environment's changing. And that's the reality of it. Chat, I'm going to ask you guys, let's put this poll out. Bullish or bearish this morning? I know, Tanya, I'm stealing this from you, but I like it. It really, I think every morning it's been fun because it kind of gauges what people are thinking in the marketplace. And I think a lot of people like to see every day the numbers are going up on the poll. So let us know in chat, bullish or bearish. Jimmy, I know we're getting to you here now for the Edge report. I definitely want to see. I gotta plug it. I want to see what's going on in copper and oil, and I want to see what you think technically for those. So let's send it over to Jim now for this morning's Edge report.
All right. Let's briefly talk about the E-mini S&P. I just wanted to show this daily candle chart right here. All the moving averages and the anchored volume-weighted average price are all converging right here. We have a couple of baby candles in a row, and as Tracy pointed out, boom, we're tagging that 50% retracement from the highs where I started my VWAP on February 19th to the lows where, well, all the way to, right now. So kind of like anticipatory, we're waiting here. We're right at that 50% retracement. The textbook says anything could happen. Let's go to the 10-minute chart and look at the mentor Q levels here as well. It's interesting because when I see JAX 1 is way down here at 5,800, right? I had to adjust the axis of my chart, but it's not way down here. It's only 25 handles. So this is JAX 1 right below previous session's lows, 2 areas of interest right there on the downside for the bears. For the bulls, we have this call resistance line up here at 58.50, even number, it makes sense. And we also have a JAX 2 level as well, previous session's highs at 58.37. So we have some really good defined targets, even though we're in a small range today. 22 handles so far overnight. Incredibly, this is just extraordinarily a small range so far, as even the overnight traders couldn't get things to happen. But let's go over to Dr. Copper right now really quickly here. And I'm just going to start with the daily chart, though, just to kind of show you, just to get a visual impact of what's going on here. I mean, this is just a breakout of a double top, top one, or maybe a triple top, top two, top three, a breakout all the way past that 5.2 level. And that was that's a relic. That's an old high we saw, I think, in May 2024. Today so far, we have a seller's wick, though, coming in. We have a seller's wick coming in that pushed it, but we did wick all the way up to 5.737, give or take a couple of some change there. So that was, again, maybe this is going to start to settle down, but we'll see what happens here at the end of the day. We'll see if this candle resumes its upward pressure or not. But 5.20 is kind of a big deal for me. All the moving averages are just shooting back up. Real quickly here on the gamma levels here, similar to what we just saw. We have JX1 at 5.2, right? And again, and it's no surprise, it's right by that level we saw on a daily chart. This is a 30-minute candle. R1, R2 couldn't make it up there. Call resistance couldn't make it up there. Again, small range today. We have some weird wick that happened up here, and I guess we saw that replicated on the daily chart. Not sure why, but there's probably some sort of news that spooked the market at last night at 11 o'clock. So I'm not going to discard that, Rick, but kind of the trading range is pretty tight so far. Look at the volume profile. It's a really tight sideways market here today. Again, anticipatory, slowing down its roll on the upside. Crude oil. Let's take a peek at crude. Again, I'll start with the daily really quickly here, just so you can see the trend. We kind of broke out of our consolidation range. That 2 weeks worth of consolidation range. And now we have the 8 EMA about to cross above the 21 EMA. That's that gold line and the red line. And that could be a sign of, for traders, we love to look at these moving average crosses to suggest maybe a momentum change. We're above the 50% retracement right now, and we're tagging the 50 EMA right now. So this is kind of we're in play right now. We're not to $70 yet. But a $70 handle, I think, is going to be a nice round number for traders to look at later on. Maybe it's today, maybe not today. Bumping up against call resistance, 0 DTE, gamma wall, 0 DTE, and R1, 2 areas of interest right there, 69.75. So that's a nice kind of move, bounce, touch point. Nice retracement on the downside right here. We'll see if we get that 38.1% retracement or not. And JAX1 is perfectly aligned in the middle here at 69.50. So again, I'd expect some kind of little bit of retracement, but maybe a continuation on the way up. Bear with me 1 second, guys. All right, I'm back. Let's take a look. We have time to take a look at the Bitcoin. Let's go to the Bitcoin. We're still in the March, folks. We're still in the March contract. 13,000 contracts have traded so far. And again, take a step back, see if my charts will cooperate a little bit here with the daily tab. Sometimes it takes a couple seconds, but now there we go. So we're in this trend channel still. Really nice, subtle trend channel back up. This thing started back in March 10th. And there's no real extreme moves here, like you'd see this big red candle that you typically associate with Bitcoin. But right now it's kind of really nicely sitting right on top of that 21 EMA. So the trend is positive right now, but subtle. And then if we dig into the 30-minute chart, we're just tangled in love around this call resistance level and this gamma wall at about 88. 13,000. Previous sessions highs also. And look how small this range is. 1330, small range so far on the daily chart. This is just kind of following in the shadows of the equity markets. That is the Edge report. Back to you, Deli.
So when I look at what everyone's talking about in chat, first of all, it's good to see people talking about commodities, people talking with Tracy in chat about oil. And, one of the comments was, I'm long 3 contracts. Should I take some off? I think the most important thing to look at, traders, is not only a process for entry, a process for exit. So like for me, I'm a scaler in and a scaler out, and everything is planned. So literally the minute I get in, most of the time I'm already kind of knowing where I'm going to get out. Now, mind you, I'm going to let the market reactions tell me. But once I'm in a position, I always have a plan on exit is equal to the plan of entry. And I am somebody who scales in and scales out of everything, because one of the most difficult things for me to do as a trader was to be able to hold a position for a longer period of time. I went from a super short-term scalper to a swing trader, and it was very difficult for me because I'm used to just covering everything or all in, all out. Anytime that I'm in a position, or I went back then when I was doing this transition, I was in a position, I was taking a majority off, like trying to learn how to just like train myself to like, if I bought 10, I'd sell 8 and try to hold 2, whatever it would be, right? And I would start to figure out how to hold them, and I would have that plan because I want to try and hold my smallest position, as long as I could. And a lot of times that smallest position made more than the biggest position. And so when I see that in chat, I just want to tell people that work on that as well as entries. Everybody's so fixated on entry. Where's the best spot? And it's obviously very important, but it's also important about management. We look at, PAX is in here. And one of the things about PAX that people don't talk about as much is that, like, obviously with his opening range trade, and I think a lot of people understand that, and they get so focused on the entry. But knowing PAX and watching him for many years, the real skill set is the way he exits trades. That's the real skill set to me. Obviously the opening range, anyone can learn it, but how to be able to trade, how to trade it and make money, the execution is where it is. How you get out of them is everything. But interesting, Shai. Energy and metals again.
The big movers. And you guys, if you haven't traded commodities before, there are micro contracts. There's no shame in that. If you want to start with those, they have lower margin requirements and not as much leverage, but get your feet wet with those.
Yeah, I don't know why more people don't look at those, especially, when you look at, gold and oil, 2 simple ones,
right?
The easiest path in. Even micro treasuries, I got to tell you, you're just trading the interest rate. If you want to trade interest rates, I think, as a newbie product, it's probably one of the best products CME Group came up with, because you can actually trade the percentage of the 10 years. So if you think it's going to go from 4.3 to 4.4, you can actually trade that, and it's $1 a tick. I think that was brilliant on their part. I don't trade them, but I watch it all day long. And I think if you want to trade it, it's a good market.
Yeah, but and they have the 10-year yield on that too. So
yeah, that's what I was saying. Yeah, the micro yield. So yeah, everybody, don't forget there are micros in all these products. And I don't know to the extent of all of the softs that they have micros, but I know that they continue to drip more of them in. And I actually think, kind of funny note here, or, kind of a interesting tidbit is I believe the first micro, and I did this on Futures Radio, I believe the first micro product was gold.
I think yes.
Correct me if I'm wrong in chat with that, but and I remember doing a podcast on that for Futures Radio. Gosh, it had to be, I'm going to guess here, 2017. That's my guess, because I remember it was prior to COVID. I remember talking to CME about the micros. It was 2017, 2018, maybe 2017. And so the micro gold's been around a long time. So anyway, data, durable goods today. Again, just give us a quick preview of it, Shai. And also, if you think there's any market impacts on this, then just give us a little bit. I see this durable goods order over the years. I don't really know much about the insides of these numbers. I don't care to look too deep into them. slow day, kind of not a bad time to understand what the data actually is.
Yeah, absolutely. So durable goods is just new orders for manufactured goods. It's really simply all it is. It's new orders, shipments, inventories. It's kind of the health of the manufacturing market on the export side.
And so minimal impact, even though is it what they call, red folder data?
I think, well, it's considered, important data, but it's not necessarily market moving data.
Yeah,
right.
That's a key point.
Right. And so it's more of it's more economic news. Right. And so it's kind of what is the health of the manufacturing sector look like? And then how does that relate to the health of the overall economic sentiment in the U.S.?
Got it. That's important to note. I mean, sometimes we see these data points, and why they're highlighted is because the Fed's looking at them.
Right.
Other things are into play here. As we go to chat, I got to highlight this comment because he says, my hair's on the next level. I mean, that's always worthy to note. And I got my new Scarpines.
You just made his day.
You made my day. And I got a haircut. I finally got time to go and run and get a haircut. I got a haircut yesterday, so I'm feeling real fresh today. I got the fresh kicks that I showed on show on Mondays. Today's Wednesday.
Today's Wednesday already.
That's right.
I'm pleased when you're having
Wednesday.
fun.
Kane's Day. I'm excited for Kane. You love Kane too. I mean,
it's the accent.
It's the accent. Yeah. So yeah, anytime you do a hair comment on here, I will highlight that on the show, just so you know. Let me see.
And I'll hear about it for the rest of the day.
I might talk about it. Yeah, happy Kane's Day. It's Wednesday. Chat, hit that like button. We got Pharm coming up. We talk about Tanya's army. Pharm's army is growing every single day. People love Pharm. He and I are going to be talking about the charts today. We're going to be talking about the Boomer Bollinger Bands, and I've got some things to highlight with you guys on that.
You need to trademark that.
Boomer Bollinger Bands,
yeah.
For sure. It should be a drop down at Ninja. I think I know a guy to maybe get that done.
That would be hilarious.
If one day you come in and you hit the drop down on the Ninja account and you go to Bollinger Bands and you see Boomer Bollinger Bands, there you go. And my indicator's name is Beacon. And it's so funny. I remember when I was creating this indicator, I created my indicator in 2000. I think it was 2000. It's crazy to even think that. And it's funny. I'll spend more time talking about what my indicator is and how I came up with an indicator. And it's just a Bollinger Bands, but it's just the way I use it. And that's the point I wanted to make, is that any time you're looking at any of these indicators, it's from the eyes and the beauty of the beholder, right? Like, you don't need to use all these indicators in the traditional way. Like, I use Bollinger Bands the way that I use them.
Right.
And if we had John Bollinger on here, he'd be like, that's probably not the way I use them, right?
But that's why there's so many indicators, because I think, not everything works for every trader. So you just kind of have to figure out what system works best for you. There's no right or wrong about it.
No, it's just like everyone talks about what the actual opening range is. Well, the opening range is, well, I mean, technically, it is the way that PAX does it. That's like the original, the OG way to do it. But like, I look at a 3-minute opening range bar, and people are like, oh, that's not the opening range. And some people are like, I look at the 30-minute opening range, or I look at the 15-minute opening range.
Right.
It's just the opening range. I mean, it doesn't mean that it has to be the exact opening range that everybody says. You find your way as a trader, and that's what's important.
And I think, I mean, a lot of times I found, well, at least for me, less is more. Like, I think the more indicators, when I first started, trading, I had a million indicators on my chart.
I know.
And then they all say something contradictory. So.
Yeah. And you have the cleanest charts out there of anybody I know. And I love looking at your stuff, and it's great. I think we got data coming out now, Shai.
Yep.
Let's see if that number is hitting the tape here.
So durable goods order expectation was minus 1.0. We came in at 0.9%. So a little bit higher than expectations.
No initial reactions I see pretty much anywhere, as anticipated.
Again, it's not really a market mover, but it is an important economic indicator.
Yeah. All right, Shai. Thank you so much. We are now going to be moving over to My boy Pharm. I am always wondering what's he. Let's see how fresh he looks today. Is he gonna have his nice haircut? Is he gonna have what color of his Pharm Capital shirts he's got on? We'll have to wait and see as we wait for Pharm to join us. There it is. It was Navy. I was gonna say Navy. I knew it, and there he is, my brother. My 8:30 in the morning a.m. brother. 5:30 for you. Good morning, Pharm. How are you?
I'm doing well, Deli. How about yourself? It is very early here.
It's early. He's got the NinjaTrader Yeti that we sent him. You got to showcase that a little bit. Does it have your name on there? Let me see that. Let's put that back in the camera here. Let's see. Oh man, that is sweet. Yeah.
Yeah, my daughter does the dishes and threw it in the dishwasher, so it's a little wrinkled, but I still love it.
Well, here we are, right, Pharm? I mean, before we get to the charts, I think this is so important. This morning I'm talking about market environment. You and I are big believers in this. Where are we right now in this? I mean, amazing where we were maybe just 3 trading days ago to where we are now. Totally different market environment.
Yeah. Yeah, we really are. And I mean, volatility has come down tremendously. I mean, I don't think we did 30 handles on ES yesterday, right? The range. I mean, what was the range yesterday?
I don't even know what the from top to bottom was. It wasn't much.
Yeah, no, I think it was like 9 to 37 or something like that. So that sort of changes things, right? And I'm usually looking for bigger range trades personally. I'm not really interested in scalping. I'll scalp once in a while, but your 3-4 handle scalps aren't really my style. And so for me, that just means less trading, being more selective. And for some people that's difficult, but that's where we're at right now. Just sort of this upward consolidation grind. We'll see how the next couple of days go. And if we can build out, maybe a wider balance, and get a little bit of range. But for now, that's where it's at. And to me, being selective and keeping it small makes sense.
Yeah, you and I are going to go through the charts as we always do. We're going to start with me today. And I'm starting off with the E-mini S&P, and I just look at it and I go, my first thought when I see it is sideways to higher. I mean, we are back in this type of mode, and it's not super bullish to me either. I've got my 821.34. Again, very simple way for me to look at trend. It never gets me into trades. All it does is help guide me in what is the market environment, what is going on simple moving averages. It does nothing more than paint a little picture for me. And when I see that we're above the 8, we're above the 21, and the 34 is up near my target around 59.30, which is where I think we're headed on the daily, I look at it and go, two-way tape. I lean bullish, not super bullish because it's not above all the Bollinger Bands above the moving averages. And I look at it and just go, okay, if I'm trading intraday, small, lean towards the buy side, but understand that I could probably trade this two-way, but lean more towards the buy side. I have a little heavier weight on that direction, which is the long side. And know that I think on the higher time frame that I think that we're likely headed to 59.30. 59.30 is that big target I had, and I said many times, but as long as we hold above 56.80, that's where we're going. And I still think that that's very doable by the end of this week, if not early into next week. When I go to NASDAQ, I mean, they look so similar, Pharm. I think this is the most important thing for me right now is that when I look at the indexes, they look almost identical. And I can't stress this enough. When I see indexes working together, there's a couple things I think about to make my life so much simpler. One is when macro coincides with trend, bigger moves happen. When indices are working together, bigger moves happen. When you have divergence or macro is contradicting trend, choppy two-way markets, who knows, right? Right now, we have a scenario where the indexes look almost identical. And they're not perfectly identical, but they're pretty close. And then when I go to the Russell, it's like I almost can't tell the difference between one chart to the next. I see it in the S&P, the NASDAQ, the Russell, and let's see the 30-30. I can't believe I'm calling it the 30-30 now. Tanya's got to really, she's got to copyright that, trademark that. It's a great name. It's very similar. And so for me, when we think about environment, I look at this and say indexes are working together, volume is down, volatility is down. We went from bear environment to now, I think, sideways bullish environment. Understand it, adapt to it, accept it. I don't really have much else, and I'm going to go to one chart before we turn it over to you. And I want to go back to this 10-year. And the one thing that I will say is, I said yesterday with you, I said the one thing that concerned me was 10-year gets a little bit too ahead of itself and starts getting above like 4.4-ish%. It's still stuck in this box. It's still sideways. This, I think, if it does break out, could put some pressure on indexes. But again, that's not looking like that's going to happen either. So that's what I've got, Pharm.
Yeah, I think you're right. I mean, it's this slow sort of upward grind. The indices mostly look the same on their profiles to me. NQ's got perhaps a little bit better separation, and maybe at least shorter time frame looks a little bit better, just a little bit stronger to me. And, there were times yesterday where, they didn't really work together. ES was a little bit weaker, just a little bit more heavy, and NQ stayed a little bit strong. And it caused a little bit of chop and a little bit of difficulty, especially early. It was kind of a weird day for me yesterday. We had a decent seller, I guess, come in at open. Nothing crazy, right? And buyers just absolutely stuffed him. I think we talked the 58.11 to 13 on ES yesterday. Buyers defended. They were strong. We lifted to new highs. And then it was like this bizarre, okay, mission accomplished, banner was raised, and then just like profit-taking mode. And so it was one of those days where, like, if you hit the long in the morning, you're good and probably should have just been done. If you miss that long, then you're probably trying to buy dips all day in like this downward grind. And it was just a brutal, boring day to sit and watch. And I didn't take a trade until 3 o'clock. Actually, I mean, I just sat there and I didn't take a trade. Actually, no, I think this is a funny story I'll tell since like we've got some time. I did take a trade just before that. We came down, and I'll go back to the daily because this is kind of funny. So we had talked about that 58.11 to 58.13, and we had put in the IB low right there yesterday. And so I was coming down, and I was watching for a look below and fail of the IB low yesterday. And that was because like the selling in here on the way down, it didn't strike me as being particularly bearish, right? And the pace sort of got pathetic as we came into the IB. We saw some nice absorption as sellers took it through the IB low, like a handle or two. And so I did slap that long. And so pro tip, make sure that your focus is on your Discord when you're typing a message in Discord and you don't accidentally hit your hotkey for flatten all on your broker, because I sniped like 11 and ended up closing full at like 14.75, I think. And it was embarrassing. But we all do stupid stuff, but I like to make fun of myself. But it was just kind of a gross day on ES. And what I would like to see, I'll go back to the 30. I would actually kind of like to see sellers find a way to force just a little bit further balance. So we haven't taken a prior day low. And if you recall last week, we talked about how, buyers probably did not want to give back a prior day low. And I think there's a little bit more room for that here. We've got, some people might draw, some kind of an ascending wedgie type thing or, whatever on here, but it's ultimately balance here anyways. And so I think we could afford on ES to take out yesterday's low, potentially just sort of widen this out. Like I wouldn't even mind coming in down here, like 57.90s, test that buyer at 5800 from, I think it was Monday. And just sort of widen range a little bit. That's all that would do to me. It wouldn't be particularly bearish, but like I think you're going to notice pretty quickly when there's a change in character, because sure there was selling yesterday, after we hit this high, but it wasn't strong. You know what I mean? It was just true, just like profit take mode, grind lower, the bid kind of evaporated. but like that wasn't to me impressive selling at all. So it's just patience and being selective. And then, for me, the trade that we took late was just like, I mean, how many chances are you going to give sellers to get through this 58.11 to 13 spot? And so, once they just completely and utterly fail for, 4 or 5 times, then we're just going to go ahead and slap it and punish them. So, that's kind of where I'm at, just very, very selective. I don't even necessarily love the setup into today. I think you could look at like this 22-ish level here I've got on there as kind of minor. I'm still leaving, 11 to 13. We came down and we sniffed it overnight. So this could be a situation where we come down there and hit it again, look below and fail the overnight low, consolidate in here. That would be fine. But I would kind of like to see again, because I like bigger ranges. I would like to see us take out a prior day's low and just sort of widen things out just a little bit.
Yeah, it needs energy. That's the bottom line, right? That's what you're saying. You're saying that technically it wouldn't be a breakdown, but it would actually potentially cause some volume and volatility to come into the market, and that's what could take us higher. It's funny, sometimes you need to go down before you go up. People don't think about that, but it's the case. That's why you need short sellers. That's why futures markets, are the way they are. They're so efficient because you're going to build up short positions, and people can get short just as easy as they get long, and so that's why we move the way we move, And so I agree. I think a little lower, as long as it, Tanya talks about this a lot in her pre-market. She likes to look at the wicks, like when it gets down into like an area that she likes, maybe take out a low and then get back in the range. I like that as well. I think you're saying it's something very similar. It's just, it comes down to where, we all know where the stops are. Right. Everyone that's leaning on a key area or a prior day's low, there's going to be some stops there. I've put stops below prior day's lows, prior day's highs. So it's not like, it's Captain Obvious here. We all should understand that. So sometimes when they get run and they get back up, either people want to get back in or new positions get entered. That's how you get that energy.
Yeah, I mostly want it because I want a bigger trade, but it absolutely would provide some bigger energy. I flipped over just to the daily, real quick. So you look where we're at here. Again, we talked about the fact that we broke away from 2 weeks of range here. So to me, any kind of balance, above those prior 2 weeks is completely fine. So we could just grind here for a couple of days, come all the way down here, and just big picture, that would look fine. So I don't mind that. I'm not looking for a short at all. I've seen nothing from sellers to suggest that I should be doing so. And I would reiterate that, I think you're going to tell a noticeable difference. Volume was low yesterday. And again, there was some selling, but that's not the kind of selling we saw a few weeks ago, right? When that comes in, you're going to notice it. We're going to drive through the overnight low. We're going to drive through the prior day's low, and we're not going to stop. So, when the selling looks sort of weak and it's just sort of a grind lower, to me, that's not too much of a concern. And it just means wait a little bit longer. Do you play poker at all, Deli?
Not well.
Not well. No, that's fine.
I actually I play gin and roll dice.
Okay. I've got an analogy that I used for somebody yesterday. I think they had come in and they had traded right at the open, and taken a couple of stops, and then eventually missed the good trade for the day, which was basically up these call it 58.10. And the analogy that I use for people, especially when things get kind of choppy and grindy with these narrow ranges, it's if you're playing poker and you think that you have an edge over the table, are you moving all in, pre-flop, before you have a whole lot of information? Or are you waiting until you have an informational edge against your opponents and moving in sort of later in the process when you believe that you have an edge? And, the correct answer, if you don't play poker, you maybe don't know, but you should be pushing your edge. If you're a better player, then you should be taking advantage and pressing edge when you have more information. And so for me, sometimes waiting later in the day until the profile develops and matures and the price action develops and matures. You have a good feel for, who's strong, who's weak in the session. That to me is what I go to on days like yesterday, and just avoid getting chopped up. But it just seems like everybody wants to jump in a trade right at the open because, you've been awake for however long, excited for the day to start. And then you jump in and you get blown out on 3 trades. And then, you're done for the day. And then lo and behold, maybe it's middle of the day or end of the day, the perfect trade sets up and you look back and you're like, oh, that was the easiest trade I've ever seen. I would have nailed it. But you kind of got blown out too early. So to me, patience is key, especially when we get into some of this grinding action. Did I lose you, Deli?
Oh, sorry. I said the morning, 2 things to take away from that. I hit my mute button as I went on. It's kind of a weird thing that I did that. I don't know why. But so 2 things to take away from that. One is most traders' strategies are built around more volatility, right? Especially short-term day traders. So the morning is typically the better trade because there's more opportunity, right? We're making the range. There's, it's the beginning of the day, and there's always going to be, not always, but most of the time, more volatility at that time. So most people feel that they have that small window to be able to execute in. And so there really is a fine line between, and this is where just time is your friend, to understand that you will possibly have an opportunity later in the day, even though later in the day may not be your ideal time to trade because over time your stats aren't good. And it's probably because your stats aren't good because you either forced the morning and then forced the afternoon, or you didn't really have, you didn't just wait for the A+ setup. And so I think that's the mistake I see a lot. And so you have this morning window where when it gets busy, people feel compelled to do something. I know because I've felt that for many years, especially when I was on the floor. You'd go in there in the morning and you'd hear the energy and the loud morning versus the quiet midday. And all of a sudden you're like, man, I'm the only dude trading right now. You're like, this is embarrassing what I'm doing to myself right now. Like I'm sitting there, I'm like in my own fast market, like an idiot. And I'm sitting there and why didn't I make it in the morning? And the next day, the morning doesn't give me a great setup. I force it and I lose. And so it's difficult to, I think, to make these judgments, but that's why you need time. And it's so important to really just stay so true to your plan. That's why you and I meet every morning and we talk about a plan. And so as we get to right around this time every single day, you and I start to talk about like, what is that plan and what's that layout? And let's go there now, Pharm. Like, let's set the table for, again, it's not about the morning or the afternoon. It's about this. This is what I'm looking for.
Yeah, I mean, where we're at here overnight, you can see we held kind of like this 22-ish spot, and that's kind of, maybe it looks like it's turning into a bit of an early pivot here, and that's kind of what I had in my plan last night. I wasn't necessarily looking to buy it this morning, which is why it went max bid here. But it's similar situation to me for the last couple of days, which is, caution on rips, but buying constructive dips. And so, the 58, I've talked about the 5830s, 5840s, kind of upward in this range is a little bit of an area of concern for me, NQ 500s, 530, 550. There's some tough spots up above. So, if we're opening up near the top of yesterday's range, I'm definitely not looking to chase a break of yesterday's high. Personally, it's just my style, but looking to buy dips. And these 20s here, obviously a pretty strong bid just now off the 20s. So that's nice to see. As long as we don't lose and offer these 20s, then I do favor taking out yesterday's high. And we'll see if we can get into, 48.5 or 48 was February's low. And so then from there, 58.75 is potentially tricky. When we had balanced in the 2.5, 3 months or whatever it was, 58.13 to 61.63. Really, most of the dip buying was at 58.75 ish. 58.75, 58.80. So to me, that's where, if there's going to be some supply, it's going to be there. And that could potentially be one of the spots that slows us down from 59.17 to 59.30-ish. But I agree 59.30 is completely reasonable as long as 58.11 to 13 holds. And, that's where we're at right now, is balancing over 58.11 to 58.13. So, my preference is I'm hoping we see some selling come in, and it's not what I'm saying is going to happen. I would like to see that. I would like to see sellers take a stand, try to force some balance here, give us a nice bigger range to work with, because again, back on the daily, if we just build this out over a few days and we could get a nice box, well, then I'd be looking for a box trade. So let's say, we form multiple days within, this kind of range here. Let's say it's even 57.90 to 58, today, yesterday's high, 58, 37 or whatever it was. That's at least a little bit better range than we've seen recently. And so then, if we got a look below and fail of that box, I would take it to the other side and then try to get runners up for 58.75, 59.30. So that's the big reason I want to see sellers come in and try to force balance here. I just want a little bit better range, a little bit better setup. And, knowing that, it's going to be mostly long biased above, the last 2 weeks highs. So, again, you could chase along and open if we're above, 20s, 58.20s, I suppose. That's not for me. I'll probably sit and wait. And, if we just go trend day up, then there are ways to join trend days. That's not a problem for me. So, I'm just going to wait and hopefully see, something from sellers today to make things a little bit more interesting. But I mean, the Dow looks strong. It's rallying up towards yesterday's highs here overnight. NQ still looks fine. Russell even looks okay. So it looks a little bit mixed to me, but definitely leaning bullish, overall over the next few days.
Again, no divergence. Indexes are working together. There's no headlines getting in front of this. Market environments change. We went from high volatility, high volume to low volume, low volatility, feeding the bulls theme. Nothing out there in any markets that is giving us a signal that this rally can't continue. We've been saying this since really Friday morning, and I think it just continues. And again, it's just about adjusting and adapting. Anything could happen today. What I find interesting is a couple things. One is if we take out the prior day's low, you don't believe that that's really a bearish thing. Well, what's so funny, Pharm, is that you and I talked about this a couple of days ago, or even just yesterday. We said the market's very fragile to taking out a prior day's low. Now you don't feel that way.
Yeah, that's exactly right. And, if you just look back at the daily, again, breaking away from that 2-week range is what was key and what offers the strength and the resilience that we have seen from bulls, because, everybody's waiting. And I'll tell you right now that if we had not done this, I said this off the low, when I said that I thought that was swing low, I said that if we just ripped directly out of there and we had come up to some of these spots where we're at now, that I would have been shorting it like aggressively sized. But we didn't do that. I said, if we formed some kind of multi-day balance, that's where you get, give longs actually a chance to accumulate and trap some sellers, right? And then break that to the upside. So it's going to sort of keep, a bit of a passive inorganic bid on dips. So to me, I just say inorganic because I'm a nerd, but like, organic would be like a new money long, whereas inorganic might be a trapped short that's covering, right? Or maybe like a dealer from, some kind of flows. But, to me, as long as we're holding above those prior 2 weeks, one day of taking out a prior day low isn't going to necessarily be that big of a deal. That's exactly right. Now, part of me is looking at the volume and saying, okay, we did like, I don't know, 1 million yesterday on ES, I think. And it's pretty low, which like doesn't bother me on the way up in general, in bull markets, bull trends for sure. But we have seen recently the last year, anyways, that we've had a couple of uptrends that saw declining volume. And then when the volume came in, it wasn't favorable for bulls. So I'm still wary of some of this supply from above, that at some point they may choose to take their exits. And the bulls have been a bit tentative to me the last few days. They've been firm on dips, but it seems like they've been a little bit reluctant to lift. And then you see the profit taking come in. And so to me, if and when we see any kind of meaningful volume come in on the sell side, then I do think they're going to collapse a little bit. So I'm a little bit worried about that. But if it's just sort of the grinding action that we saw yesterday, and we take out, yesterday's low, for example, and then we just pop back into range, then whatever. Again, you're going to see a huge, huge difference when there's high time frame selling in the tape. If that's the case, we're going to come down here. We're going to rip through the overnight low. We're going to rip through yesterday's low. We're not going to look back. We're just going to build volume lower and lower. And it's going to be very, very different. And I'll liken it to the situation yesterday, which is why I like the look below and fail the IB low trade as a long. And actually, let me zoom back a little bit. Here's, yesterday's profile as it completed, but I mean, it's mostly how it was back here, right? So it's somewhat of a balanced day with a little bit of a chunk profile, but one of two things is going to happen when sellers come down here. And they're either going to crack this and they're going to drive with continuation and start building volume down here, and you're going to end up with like a double distribution day, or they're off sides. And like, it's one of that, that's it. I mean, it's one of those two things. And so to me, if we see conviction driving through those lows and volume, and it's not revisited these lows, then okay, well, I'm not going to take this long. But if you just keep seeing this tentative, this tentative covering and hesitancy from sellers, then it's a long. And so it's going to be the same type of thing when we take out a prior day's low. If you see any kind of hesitancy from those sellers, then I'm probably going to be looking to fade that. You should be able to tell a very, very big difference when real selling comes back in. It was only a few weeks ago. So, this wasn't it, this choppy grind. This was just like profit taking time. And that was it. So that's where I'm at. I really think you can tell the difference pretty cleanly. And I gave you the example of the IB, of how that might look if it were strong sellers versus just, some passive selling.
What's so important, everyone, is as we talk about market environment every morning, Pharm and I, and really from two different places, right? I mean, you use volume profile. I mean, our charts look different. We have, different philosophies, but we come to similar conclusions. And I like when we don't have similar conclusions because it makes everybody think. I mean, we don't want everyone to be thinking the same. That's what makes markets. But when it comes to what's happening right now, I think we're all on the same page. And the biggest difference is on a day like today, if you were to take out a prior day's low or start to head down there, this is where you need to look inside the candles, inside the tape, where volume profile is massively helpful. Order flow labs tools, we have tools for the imbalance here on NinjaTrader. Yesterday we talked about it with Merit. When you look at Delta, this is when understanding an overall environment and what it is, and then when you get intraday, you can see like the selling is different. It's a different in the aggressive nature of it and how it is, right? I mean, some people that really works for to get that granular and look within the bar. Other people just go, well, I just want to see price action, right? They don't need that, but it's good to know that there are those different ways to look inside the candles or inside the bars to understand, again, outside of the context of the market environment that we're putting forth every day, Pharm and I, and then to even get more granular intraday. Pharm, you're the best. Thank you so much. Make sure everybody, you go out there and first of all, give the Pharm, hit the like button for him every morning. We're going to start calling it Pharm's Navy and Tanya's Army. I think that's better. I mean, he's got the navy blue on today. I mean, that's where, and, follow him on what he's doing with his Substack. He's always trading live in there all the time. He's fantastic. Sign up for his email list. Pharm, you're the best, man. I will see you tomorrow.
Appreciate it, Ellie. We'll see you.
Tanya Army, are you ready? All right. Every morning, Monday through Thursday, 9 to 9:15, Tanya trades. Good morning, Tanya.
Good morning. Good morning. How are you? Good morning. Good morning. How are you?
I'm doing great. So here we are. We just finished with Pharm. You and I talked about this last week too. We were talking about how last week, if you took out a prior day low, everyone's getting ready to put their foot on the gas and look to sell every rally. This week, Pharm just says, you know what? If we take out today's low, no big deal. I'm still kind of bullish. I almost look for that to happen. You talk about like wicking into these areas. I'm very curious to see what your mindset is, what your process is coming into a day like today.
Right. So I'm pretty happy with how we did yesterday. Yesterday I said like I'm not going to fade a second update, like a potential update after just only one large update. And we did hold that level I had at the midpoint here pretty perfectly in the morning. So today we're just kind of opening up sort of flat. Like I said, I'm kind of like more neutral today because of we already took out on NASDAQ actually, we already took out yesterday's high, now we're back in the range. ES didn't take out yesterday's high. I mean, we could go towards this, previous day low. I would be fine with that. I wouldn't turn bearish like that because that's just now a daily fair value gap. And it would make sense to do that. So if I go to the 4-hour right here. Yeah, I was pretty happy with yesterday how we held up the midpoint of that volume gap. And now, like I said, I'm kind of neutral in the day. Like I'm not particularly bearish or bullish. Coming in kind of flat, just thinking, okay, we've just consolidated during London and Asia basically. So I kind of like that in that sense. I'm gonna note definitely that we did take out previous day high on NQ already. So I mean, we could just retrace back into the range if we have that sort of divergence between the two. And then we could go towards yesterday's low. I wouldn't put that out of the equation. Let's see here. Yeah, so I think that happened during like Asia. Yeah, during the Asia session. Go to the 15-minute on both ES and NQ. Yeah, so there's just a small divergence there. Right. So ES didn't take that
Are you
out.
seeing less and less of the divergences? I'm just curious. So yesterday we talked
Yeah,
about that.
like,
That's always
yesterday wasn't
something
too
I
bad.
look for in you.
Yeah, I mean, I think yesterday was good in the fact that, well, in the morning, I think ES was a lot weaker than NASDAQ. I went long with NASDAQ and that ended up working out pretty well. And even the long in ES would have worked out. But when I see just like divergences like this, then I think, okay, that's a potential, clue that maybe we will then go lower. Like if we have someone take out one of the indexes, take out a high and the other one didn't, we can go retrace a bit lower, just like on the daily there when we were talking about last week where ES took out a previous day low there. We were talking about that last week. That could be the indication that we're gonna retrace back up, right? So, and it was. So, I don't really use that as like the entry but it's like one of the first confirmations I look for. So first I look for that as a potential clue of a reversal. And then I look for more confirmations, which is like a structure shift to the downside if it's one of the indexes take a previous high and the other doesn't. So just like here, what was it? Yeah, this was a potential clue that it was time to, that there was some exhaustion. We were gonna go back higher, and we did, so that was cool. And then if I look at just lower time frame stuff like that, it's a potential clue. It's not end all be all, but like then I do look for more structure breaks to the downside. So let's take a look here. I'm pretty neutral on the day. Let's see. I put 15. Okay, the 15-minute.
We're 62-38 on the bullish bearish poll today. 62% bullish, 38% bearish.
Okay.
Almost
I'm pretty
over
neutral
300
today,
votes.
honestly. Oh yeah, I don't. Yeah, okay. So now there's only two choices on the poll, right? sometimes I think the other day you guys put like I'll wait
I
until
gotta
the
add the
open.
neutral.
Yeah, I mean that's fine too. Yeah, neutral is fine, but like I like making people choose between one and the other too. Um, yeah, you guys, I'm not so. I mean, I'm kind of neutral. I kind of just like to see. We did take this, like I said, on ES. We didn't take out that high, and NQ we did, but now we are just like retracing. So if we take out this high again for ES, then I just kind of wait. Um, for more information. I think today, do we have any news today later? Let's see. Today is Wednesday.
Just
We
crude oil today.
just crude oil, so it could be a slower day, honestly. Not too keen on it. Like honestly, like I'm not gonna be too bearish, but I'd be ready for it if it was, and then I would just go for previous day low. If we start breaking pre-market lows. Yeah, I think that's what I would do. Mark out previous day low as well. And then you have to be careful because sometimes then the Nasdaq could take out the low, previous day low, and because it is just a faster asset, and ES can not do that and just pause and wait. Um, now let's see ES around where is that previous day low? Pretty close to. Okay, it's like 5,800. Actually, that's an interesting level. Okay. Yeah, I mean that's totally possible. We could come back and retest the 5,800 level. It's like a psych level too. Like those even-ended numbers, like the hundreds. I think yesterday, my target for NQ, my final target where I said I'd bring out the money gun in the morning, if it hit and it did not, it paused like about 12 points before that. In the morning, but it hit it right at 4 p.m. and that was like the 2,500 area. And that just goes to show, yeah, those sometimes like the trade, you're right in the direction, but it won't hit your final target, but you can still make money along the way because if you're, adding and taking some off the table, things like that, it ends up working out just fine. So yeah. I don't know. I think yesterday was a pretty small range. I think today could also be a small range, honestly. Um, so I'm really not rushing today. Like yesterday I was kind of more, I think I said I was excited. And then I was like,
You did.
I'm not excited, but yeah, and then I was like, wait a second, I'm not excited. It's not good to be excited. But today I think it could be a smaller range day. It's no news Wednesday. We already we took out previous day high on NASDAQ. And now we're back in the range. I could be potential if we if we break the pre-market low or even yesterday's 2 p.m. low, I would look for more downside towards the previous day low. Should be this 5 a.m. low about like 2095 area. And then for ES, I mean, I think ES is the weaker one in that sense. And yesterday morning it was weaker. So maybe, maybe then it will be, maybe ES will reach previous day low before NASDAQ does. It is like relatively closer on the structurally, because this is the 5 a.m. low, like 5802. That being said, we're close to this high. If we take out this previous day high in ES, then that would be invalidated because then there's no more divergence there. And then I would probably just like assess whether we displaced above it and if we're going to go for more upside. And for me, yeah, today is like more of those neutral days. So if I'm like more neutral in the day, I'm probably going to be a little bit more cautious because like my best days when I have conviction. But if we get up above previous day high, we could get up to like around midpoint of this wick, I would think, on ES, which would be 5846, and then we could go for 5872. Just looking at this 4-hour wick here. That would be the next swing high to go for. That being said, though, I wouldn't, just like yesterday, we paused right before that swing high on NQ, which was like, and ES, which was my final target. right here. We paused right before that, at 5,800. Just like that, like it could also pause before, and like it could be just creating more equal highs and have some resistance there. So I wouldn't be just like trying to overstay my welcome today is what I'm trying to say. Yeah. Wait, we hit
When you
that
come in
one.
neutral and you don't have a real bias, are you taking your position sizing down, leading it in any trade, or is it if the setup all of a sudden comes and you think it's kind of juicy, even though you were neutral, it's business as usual?
Um, I think if I'm neutral, then I'm way more likely to kind of wait for the first like 30 minutes of the day to pass and wait for about 10 a.m. for more potential information. I just need more information. I think I'm just more likely to wait for more data, and then I'll see if I switch one way than the other based on more data. Because then I just need more candles to form essentially if I come in neutral in the day. Um, I just have to be more patient. But with position sizing, yeah, if I'm still neutral and I take the position size, then I'm sizing down for sure. But yeah, if that by that point, you know, yeah, I'm definitely sizing down. But if there's more information and then I'm like more confident about where the draw and liquidity is, where I think price is going next, then it'll be business as usual. But I think the whole point is like, yeah, where's price going? That's when I always like look at the charts. If there's no clear answer as soon as like I get to the charts, um, that just means I have to wait for more data. And then maybe this is one of those days where I'll like take a look during my stream at some of the other assets like crude oil. I mean, yeah, today we have crude oil news, right, at 10:30. So maybe that will be more of a mover. Um, Otherwise, I'm not like in any kind of rush today for the indexes, I don't think. Yeah. I think today could do like all the things I just said where okay, potential smaller range because there's no red folder news, and also we had like 2 up days. Even with yesterday's up day, it was a slow grind higher. We made money on the upside, but it was definitely just like a slower day, and more not really a momentum day, right? Smaller on the daily, smaller body candle, right? Much smaller. Today, I think it could be the same thing. Like we already took the high, and we could just be retracing toward in this range. Like if we don't take out that pre-market low with a displacement to the downside, like with energy, then I'd likely just hands off the mouse because it could just, be rangy today in a small body candle and not take out the low and just stay inside previous day candle here. And ES could have an inside day. So I think it's me just being more knowledgeable. What days are more likely to be larger ranges, which are my favorite day, CPI. Like that's the day where I'm like, okay, yeah, it's gonna be a larger range candle, or like any day that has significant red folder news. But today, so middle of the week, made money on Monday and Tuesday up. So I think maybe a lot of other people could also have the same mentality and just let price discovery do its thing, and we could have a lower volume day and that means just like more potential chop to get hurt in. So today's for me, I'm putting my foot off the gas.
Well, I look forward to seeing you start to dip your toe into some of these other markets, and I'd be curious to see if at some point in the morning we're talking about something more than NASDAQ. I mean, I'd really like to get your input and what it's like to trade crude
Yeah.
oil, gold, or any market set. I know you've talked about that in the future, and
Yeah,
as we
yeah.
run out of time here, last thing, everybody go to Tanya's YouTube channel later today. Her and my boy Pax premiering midday after
Yeah.
the NinjaTrader live stream after Tanya's stream this morning.
Yeah,
Tanya and Pax.
11:30. Yeah, at 11:30 we're gonna
Yeah.
have my interview with Pax premiere. It's really good. Yeah, I learned a ton, honestly. And I even used some of the stuff you said yesterday during my trading session. I was like remembering. It's like already it's useful.
That's awesome. Well, I look forward to that. I make sure you follow Tanya on Twitter. Check out her streams. every day, Monday through Thursday, 9 to 9:15. Monday, she's on all day with us here on NinjaTrader Live, and we've got Kane coming up next. So Tanya, thank you again, and I will see you tomorrow. All right, Tanya Army, hit that like button. And now we got Kane in the house, man. Not in the house, but next week in the house,
Next
actually.
week.
How you doing, man?
Next week in the house. Yeah, I'm good. How about you?
Good. Just so everybody knows, Kane will be streaming live from Naples, Florida, in studio next week. We're going to go to dinner, too. We have a little fun. Might have a cocktail or something. And yeah, I can't wait to meet you in person. I'm excited about it.
Yeah, likewise. Yeah, I'm looking forward to it. Yeah, I'm agreeing with Pharm and Tanya, to be honest. I kind of want to see that previous day low, but not for anything other than to go higher. But I am already short because I do trade the London session sometimes, and from a 4-hour perspective, I'm expecting at least PM low, and then trade into previous day low. This is just a panic wick, just in case we potentially dump at the open. I wouldn't want to be in it much longer than that. But if we trade into here, I'd probably just scale both of these down and let it breathe. But yeah, I mean, I'm pretty bearish today into previous day low.
Interesting. So since you're already in a trade, I'm going to cut my time short with you. But I would like, just real quick, if you could take us through why you got short.
Yeah, so similar, like Tanya kind of said, I really like it when Asia session takes out a previous day high on one asset and doesn't the other. It kind of just it shows me exhaustion through nothing other than the candles. So ES, but like buyers are not present, and then NQ buyers are, and then it kind of just ES sellers come into the market, and I kind of want to, like I said previously, I'm an NQ trader, so I want to sell NQ on the basis it's going to catch up with ES. I just need to log back in here. Sorry. Yeah. So, and then this 4-hour inversion. So previous day high SMT. I'm basically expecting the session from yesterday to expand to that -2 deviation. We got around there. We got that divergence that suggests that NQ is diverging against ES. And I just want to play the breakdown into the previous day low. The overall range that we've been currently in is very unbalanced, in my opinion. So, this gap up, although we gapped up, fairly balanced across the board. Like this Asia session kind of pulled us back into 50%, but this move up from London on Monday, we've just gone up and up only. Like even this pullback, it's not really pulling back into some of these lows. And I just always play that 50% of the range. So when we don't balance into 50% and we get around this previous day high divergence, especially around a level that I'm interested in from a projections perspective, I just look on the higher time frames, and NQ creates this 4-hour gap yesterday, basically running into the close at 4, and then immediately Asia pulls it back, and I just want to retrade back up into this balance range here. So using the term balance loosely, but if we mark out this, I just want to be trading into 50% of this range, expecting the trend to continue based on this trend here, not the uptrend. The uptrend I'm expecting to continue from here. And I want to play that. And, I'm risk off now based mainly on the divergences here. We've been diverging. ES has been driving higher into these, late London, early New York session. And now, basically as soon as we close below this 15-minute here, we got this closure at 9. I just don't want to see this 9 o'clock high traded into now. I want to see 9 kind of pull lower at least to here. And then we'll see how price is reacting. My overall target for the day is previous day low, so that we can continue back up into those areas that everyone's kind of wanting, that 21K level on NQ and that like 59.50 level on ES. And then I will happily sell the market all day. But yeah, at the moment I'm kind of wanting to be risk off because it's very counter trend, but I'm expecting a rebalance at some point. So as a retracement trader, I just have to accept that I could be wrong here and this could just pick back up. But on the basis I'm right, I can let it breathe into my target before getting long from that area into those final targets that we're expecting.
Couple quick questions for you. One, when you're counter trend trading, are you reducing your position size? Are you reducing risk?
No, this is actually this is
Or is it the
quite a
same
heavy
position
trade.
size all the time?
No, look, I like to trust my intuition, right? And that's just the real thing. I'm really confident on this trade. Hence why I kind of sized up a little bit. My average size 3 to 4 minis is 5. And if we continue to dump, I might even add to it. But at the moment, I'm risk off, right? Like my stop is relatively tight. I would like to see this breathe into here, but because this is such as a 43-point stop, it's kind of crazy. So I kind of just want to be right or wrong, like very quickly. I don't want to let it breathe too much, especially in London. We kind of stalled, and now I'm just expecting New York to trade lower. But yeah, I mean, if I'm really neutral on a day, I will downsize because if I'm wrong, I don't come into the day with a bias or somewhere I want to go. I'll always trade 10 a.m. with the same amount of size and same amount of risk because that's just the model that I trade the most. But if I'm getting in or in before or after, I will most likely down risk unless it's a higher time frame swing position, which this kind of forms kind of on the edge really. Like it's a 4-hour play, so I'm expecting to get out of it based on a 4-hour time frame. So yeah, so this is kind of a heavier size because my risk is small in comparison to my final target.
Got it. And then also when you a counter trend trade, are you reducing the position as it's going your way at all? Because the potential or the probability maybe is decreasing a counter trend. I'm just curious if the target is the target, that's it. There's no real ever reducing of the positions in a counter trend.
I don't agree with like partialing out of a trade. Like I know a lot of people do, and I understand the reasons as to why. But for me, the reason I got there, if there is a reason to still be in this trade, I shouldn't partial out of it. If the model forms against me or my draw is hit, I should be out of it. And there are invalidations, right? So like if this trade was to do this and come all the way here, I wouldn't want to see it trade back up into here. So I'll probably drag my stop loss to a swing point in here, and fine, I'm allowed to leave this on the table. But ultimately, if I cheat this bit, I will cheat all the time, and I just have to remain that like a disciplined approach to it. So, um, yeah, I know a lot of people disagree with it. That's fine. It's not your money; it's mine. So
I don't.
it's yeah.
I think you have a plan in and a plan out. And the reason I asked that
Yeah.
question, Kane, is because earlier this morning you saw some people. I know that you've been in chat, but you may not have saw it. But we were talking about like if someone has a position on, they were kind of talking with us, asking about, well, maybe if I scale out here, what do you guys think? And I said it's just as important to have a plan to exit as it is for a plan of entry. And that's why I love the way you answer that. Your plan for exit is the same plan as it for entry. If it gets to these areas, I will reduce my stop to here, but I am in the position that I'm in. And so I love that.
Yeah, look, if we get a 15-minute closure below here, I don't want to see it trade back up into this hourly high at 9 a.m., right? I'm waiting for the 15-minute closure, obviously,
Yeah.
but ultimately that's my plan, and I always plan around those closures. I'm not trying to guess where it's going to go or anything like that. I want to see this draw based on my higher time frame in the 50% of the range, that rebalancing of price. I like this 2 o'clock low, especially with the opening range yesterday. Either we are, as we approach this, I'll probably lift this and play it here, and de-risk in form of trailing some of my stops. But I would need to see volume through this area because there were a lot of buyers present here. Evidently, we came out, we came back in, we came straight out of it. I want to see us fall through this level if we're going to go to here, right? And if we don't, then I'm just going to close it. I'm just done. I'm out. I don't like to see support here because
Exactly.
especially NQ, the divergence between these two is crazy right now. ES is just trading around yesterday's open, that previous day high. We're now back below it. We're below midnight. I want to see this sell into previous day low. NQ currently leading the way, I would guess, based on that divergences. And yeah, I want to see it play out. And if for any reason it doesn't, then I would just de-risk and let the probabilities play out in my favor. I'm not trying to guess when the market's going to be topping and bottoming.
Yep. No, I love it. I'm gonna let you go here in just a second, everybody. 10:30 Eastern today. Crude oil numbers. Look at the bottom of your screen for the inventory numbers. We will put those out there. Of course, we like to have uninterrupted sessions for our live stream traders. Make sure you go and check out Kane on X, one of my favorite follows, and check out what the boys are doing at the lab. Like I said before, Kane let me into the lab. I was able to check it out. The whole crew is great. Love it. Go check out what they're doing at the lab. Kane, I'm out for the morning. I'm going to watch you from afar. I'll be in the chat. Cagnina will come at the end of the 11 o'clock or at the top of the 11 o'clock hour to close out with you. And have a great trading day, my brother. And I can't wait to meet you next week. I will see you then.
Appreciate it. See you next week. Enjoy your day, Daddy. Chat, how we doing? How's everyone? How's everyone's trading day? Anyone get into anything special? We kind of already gone over the plan. Not really too much to go over much more, but ultimately like I said, that main thing is that previous day high with ES, right? Yeah. Maddie, how are you? Yeah, the entry for me is just around, like, if we look at these daily charts, right? And I'll just take my drawings off. If we look at these daily charts, you can just see here that the ES has no wick above and NQ does, which tells me liquidity here has been taken. And I just want to see this drive back down into some of these lows. And yeah, and then my actual entry into that is this 4-hour inversion. Once we trade through that 4-hour inversion, it kind of shows weakness in the market for me. London traded up into it. We got a good reaction and a nice follow through. However, in as 6 a.m. comes online, basically this just sets the foundation of the day for me. It's like stay above 6 a.m. Yeah. Go higher. We get that 7 o'clock candle finish above 8 o'clock immediately brings us lower. And I'm just seeing these diverge as ES is pulling higher. So at that point, I just don't want to see us trade too much above this high now, because this high shouldn't get traded into from my logic. And then if, as and when we diverge again, when ES just keeps trading above this high, like this, I just trail to the next high, to the next high. I'm waiting for this 15-minute to close here, and I would trail here. And then my risk on the trade is plus 6 points roughly. So yeah, it's kind of just one of those things. I'm fortunate enough to live in a time zone where I can trade London. And once that model prints on a higher time frame, my job is just to click the button. It's not really anything else at that point. Yeah. Sumo, I'm actually just not going to answer your questions about RTH because, I don't really believe in it. Hence why I'm in a trade before RTH. I know you enjoy baiting me on it, but I'm just not going to give you the satisfaction, sadly. How many contracts did Kane say average size was? 2 to 3. This is 5. It's a bit heavier because the stop was really tight based on my sizing for a higher time frame trade. So we've got the open coming up in about a minute. And then we can go from there. No, my entry is on the 4 hour. My entry was just as soon as like this 4 o'clock candle, this 3 o'clock candle, sorry, here, I literally ended on this candle. So as soon as we traded above here, I just want to be in this trade based on this stop. So as soon as this candle opened at 345 and we traded above this high, I want to be selling in this candle, expecting it to go low. So yeah, I want to be trading this hourly wick, right? This taking the liquidity grab of this hourly wick. So if this price is going to trend into London, it probably wouldn't come back. And then yeah. So do you basically just trade the 4 hour PO3? That is basically all I do. Fractalize the daily PO3 into the 4 hour and then go from there. Yeah, I just want to be positioned in that wick. I don't use RSI and MACD because they don't really give me confluence in my model. So yeah. Yeah, look, I can turn executions on here. You can see just sold here. So we got a closure below that level for me. So this is now my stop loss. Why is that my stop loss? My stop loss is I don't want to see this hourly candle re-grab liquidity. I want to see this sell off, especially into the open. And then we can kind of go from there. What I wouldn't like to see is NQ take this without ES really showing weakness, because then that would be a really bullish sign. The buyers are just back in ES. I just want to see this really, both of them trade towards here, and then we can play some catch up on NQ. So yeah, so at the moment risking plus 6.5 points, factor in a bit of slippage, about 5.5. Yeah, I don't really have a dollar goal. So yeah, no, I don't really have a dollar goal. Could have a 10 a.m. H4 continuation. Yeah, I would like to see that, but we would just need to see a good closure below the current 4-hour candle at 10. ES is obviously just showing this 4-hour. So if we close where we currently are, I would expect us to trade a lot lower. You know, especially at 10 a.m. I would just expect 10 a.m. to open up with a lot of bearish pressure. How do you decide when to quit? Can't really answer that because I didn't quit. I think you just have to ask yourself if trading is for you, if you're struggling from a psychological perspective or not, right? So there's tons of help out there, and you live in a day where trading education is probably during the day. Yeah, I'm just if I've made money on the day, I'll stick to my rules. Yeah, okay, fine. Apologies. If I've made money on the day, I'll stick to my rules and be done. Here, if I got stopped here, although we would make money on the day, it's not a winning trade, right? And then yeah. How important do I think chart analysis skills are when it comes to making money as a trader? It depends. Depends how you trade, right? If you trade, a price action chart, then it's probably quite important. If you trade a volume based chart, then it's probably not as important, right? It's all subjective. So it's kind of really playing out in our favor here. 370. Yeah, I would also favor some of these lows down here. Ultimately, I kind of want to see how it approaches. I kind of want to stick to the plan of this. If we get a violent wick, then great. If not, if we start to trail into it, I would just let it breathe into it and trail some of this back down and just, yeah. Ultimately, I don't want to see us come back above this open level now. Mainly because of this divergence that's printing. If NQ was to pick up here, I'd expect them both to pick up. So this is just my invalidation, really. And now, based on this range, if I move one or the other, I would just trail both, right? So 58 points, I'm expecting in either direction. I want to see it trade lower before higher, and then go from there. Yeah, watching someone else trade can also, it does scratch the itch sometimes, but it can also work the opposite way, right? I'm a big advocate for once you're done trading, you should not look at the charts that much, because the temptation is real. Yeah, I think the minute chart is very noisy. So yeah. So this is 130 ticks. How many points is that? It's like 30, 32, 34 points. No, 32 and a half points. Stop now. It's kind of what, you know, leave that money on the table, expecting this area as a minimum. Did we take any 4-hour lows? We traded back into this 4-hour low. Now I just don't want to see us get back above this level, right? This wick that kind of sold us down. I don't want to be on the wrong side of this if we pop like this. So yeah, plus 30 points roughly. It's not horrific. And now I would kind of just wait for that 10 a.m. timing because I would want to see how they both develop because I was trading that 4-hour candle here. And if we pop up into this area again, I would take the exact same trade. But I want to see how that 10 a.m. candle forms now. From an hourly perspective, like I said, we have that divergence, right? They're both trading now back above the opening range. ES is holding this level, took out some hourly lows, took out this low down here. I'm not sure I want to be long on this right now, especially because of this range. And then yeah. Go from there. 2 seconds. If I was to start with futures prop again, where would I go? It really depends. I think the game's changed since I did it. I mean, there's a lot more rules now that obviously don't benefit you. So ultimately, it's a lot more difficult. Yeah. Yeah. When I did the Apex basics, I just did the basics like one and done. Win, loss, win, loss. Yeah, it's a really interesting spot, right? If we look at the hourly chart from six drove us above midnight. And since then, ES has just been buying out of this area all day. There's just so many buyers present around this 800 level. So yeah, it's a real tricky one. NQ obviously now the weaker asset, I would say, based on obviously it was a stronger asset going into Asia and London kind of corrected quite hard. I wouldn't necessarily get put off against the previous day higher take. But if it does, I'm expecting it to continue. All right. I'm not expecting it to pull back today. No, I was in the 6 o'clock candle, but I was in the 6 o'clock candle from 4 o'clock, or actually like 3:45. Is Kane the dude with the bearings jacket hung on his wall? I don't have a bearings jacket, sadly. Are we talking Bearings Bank, Bearing Asset Management? There's a bunch of bearings companies now. Bearings Bank is obviously no longer a thing. Yeah, it's a big candle. It kind of, I mean, this closure all the way down here, and especially this grab move makes me want to just risk off. So, yeah, no, sadly, the I was not in any form of pit anywhere. I mean, yes, it's going to take yesterday's high and NQ hit the 4-hour imbalance and dump. Maybe I'm overthinking. Maybe. Who knows? The good thing about the market is you'll find out. It's just time. It only makes sense in reverse, right? It's your job not to overthink it, though. Yeah, I sadly don't watch football. I'm really sorry. Yeah. Yeah, I don't have the jacket that you're talking about. Fun. It'd be cool though, like trading memorabilia. It'd be quite cool. We're getting more divergence here. I don't necessarily just use the 4 hour, but like the model for me down here is this, right? And we closed above and then we popped, right? So if we see here, we close back up into this area. Really, I got kind of bullish here on the 17th of March, expecting this 21K level. Maybe we go all the way up to 21,300s. But ultimately, my main target for NQ is around here, right? I just want to see this range delivered efficiently to get us there. And I will just always trade that efficient range. We efficiently delivered here. We didn't officially deliver here. At the moment, if we were to higher time frame trade back up into these lows, I would get super bullish. So at the moment, for me, it's previous day low, and then that new weekly opening price. That weekly opening price is that they're the two areas that I want to see that hourly confirmation to get long back up into those 2100 levels. And if we fail to do that, then it will leave me sidelined until some sort of higher time frame model prints. Getting more divergence here. I don't like it when they build up like this too much, because that is it's a bit monstrous. You know, ES is already trading up above some of these highs up here. All the way up here. So ES kind of took out this level up here. So yeah. How long did it take me to become profitable? Too long. 5-6 years. Probably closer to 3, right? Like 3, but like profitable to the point that it makes a difference. 5. Because for me, I don't really, my risk here is if price was just to come up here and deviate like it did on ES, nothing really changes for me, right? Like I'm short here on NQ. Invalidation is obviously that hourly wick that I pointed out. And then yeah, I nothing really changes. The stop is the stop until there's divergence, a break, etc. So yeah. Didn't need to put it break even. No, I'm not in a trade anymore. We made around 100 and well, like 30-ish points. I can check exactly how many on my phone. I don't really want to open my yeah, so the P&L on the day is about 3 grand. 5 divided by 25 divided by 3. Oh, sorry, 3 divided by 25 divided by 5. 24 points. What indicators do I use? I use the opening range, the Asia range. So this gray box. So if I was just to delete this, you'd be able to see it a bit better. This gray box, it just indicates a range between a time frame. I use the statistical map, which is an indicator from 2 degrees in Joshu, which maps out the likely manipulation points of the daily candle. I look for the day. You can enable things like the 4-hour. So if we enable the 4-hour, we can see how the 4-hour candle manipulates here. So the 4-hour opened here, hit that manipulation level, and it should now trade into some of these levels, right? Like this down here. So the logic is like the 4-hour wick is formed statistically here. So it's like an average daily range or ADR indicator on steroids. Cuzzy, bro. Just do one. What do I think about the S&T within this? Yeah, I like it, to be honest. I favor selling Whether I get to be a part of it right now, probably not. It is just what it is. ES is looking so strong. I don't know if I want to fade ES. I'd rather NQ deviate a lot lower and ES can like pull back into this area again, and we can then just continue higher. JMZ, they do. And then, yeah, so I use the statistical map, and then I use the opening range. This opening range is just the 30-second opening range that you would have heard Pax talk about and various other pit traders. Yeah, good trade. Kind of ran out up here, but it's not worth the risk, especially with the ES strength looking so strong. And I'm not an ES trader, so I can't participate in the strength. So yeah, it's a little bit annoying, but it's part of the game, right? We have to stay a bit sidelined. Yeah, anyone else trade around the open? Do you catch anything? It's looking a bit messy right now. Up, down, up, down. Shorted the 3-minute range high. Done for the day. Good. It's good. It's good to just get the dub and leave, right? Yeah, take the same shot as you. I'm in the lab. Let's go, Sophie. So got more divergence to the low. It's making me a bit itchy, to be honest. It's gonna sound silly. It's either gonna really fall or it's gonna range for most of the day now. Because ES really needs to fall out of here to stop this divergence playing out. Or it's just gonna keep doing this, the broadening formation, which I don't really like. My daily prep procedure is to think something, right? I live in a time zone that isn't EST. So it's not like I'm getting up at 7 doing, all this stuff to then prepare to trade straight away. I have a good number of hours before the start of the day. So yeah, my I get up, I prepare for the gym, I go to the gym. I'm at the gym for 2-3 hours, closer to 2. And then, sorry. Yeah, it's just this 2 o'clock low that we were looking at before. That's got taken a nice bounce here. And then come home, come back to my house, do a bunch of work, and then we're prepared to stream. This selling is heavy. However, the sellers aren't strong enough to take us back below this. It's 930 low, 933 low. I want to see, like I said before, I want to see volume through here. No volume, I'm not overly interested. And personally, I would just like to see that previous day low area traded into. It's going to sideline me a little bit, but right idea. Do I teach my exact strategies inside of the lab? Yeah. I don't like the term strategy, right? I just like the term model. Because it's fractal and you can apply it to any time frame where like a strategy would suggest if this does this, does this, does this, does this. There is a little bit of discretion involved, but it is quite mechanical in a lot of ways. Some people pick it up, some people don't. My advice to you is don't pick it up and assume that it's going to work straight away because it takes some getting used to. It's not a simple model, right? It will become simple once you figure it out, but it's not simple to figure out. It's probably the best way to describe it. Yeah, ES so bullish. I mean, it's whatever. I would never stay in this wick, right? My validation was here. Once we took out this low, I have to trail to the midpoint. Do I backtest often? Not really, to be honest. Yeah, I'm not massive on backtesting. I have done a lot of backtesting. I'm not massive on it now, you know. Yeah, majority. Like there's kind of three models I trade, like the lab model, sorry. I trade the fractal model by T-Trades. It's a very good model, very extremely mechanical. And then I just trade the breaker model that trades within the lab, known as the unicorn model. Those are the three. And typically I can get into all three on a good move. Right. Fractal model is goated. Like this, I have the indicator for it. If we go to the 5 minute. Yeah, it won't print. It would have printed to potentially get long here. No, it wouldn't have. So where does the fractal model print last? Oh, I've got it set up wrong. Wait a minute. Yeah, so the fractal model was printing longs on the basis that we break out these highs, but if we go to the 15, I think it's printing. Yeah, so here it basically told you to get bearish on this open up here. And since then, it's only gone down, not really come back to the open, down 500 point tick, sorry. Do I think one model is enough? Yeah, until you can start to see some success with one model, why would you complicate it with more? It's just important to know is the model you're actually trying to trade profitable. You get that through doing the back testing, right? The reps, the work, etc. What's my opinion on quant trading? I think obviously it works. Like I just don't know enough about it. It's the truth. I don't claim to be a quant trader. I don't claim to know how to do it. The volume stuff after watching some of the order flow labs at the close, I would actually like to see how some of that exhaustion can be seen, and then go from there. How do I get rid of the blue paints on TradingView? If you go to settings and go to symbol, it says here electronic trading hours background. You set the opacity to 0. That's the only way. So we're getting that move, right? Like that volume starting to pick up into this area. We're not really seeing any support here, right? So really for me is like, I don't want to see this area reclaimed. ES also just completely got rid of that divergence here. So now I'm just expecting them both to play into previous day low. I'm not really one to just short this here. We just have to wait for previous day low to get hit, and yeah. Oh, the higher time frame bars on the left. It's part of the fractal model, but you can also get that. It's called the PO3, indicated by 2 degrees. Have you read any books on trading? A few. I don't really necessarily agree with trading psychology books. I'm going to be honest. I think psychology is just a thing. I don't think trading psychology is a thing. Build at 360. Yeah, this low is great actually. I think we probably still go to that previous day low area. That's the area that I really am interested in longs. If we come back up, here, I just get more interested in shorts again. Yeah, lovely trade. the guys, I don't think one person owns a concept. I don't really buy into that. I think the stuff that ICT and Michael does is great, but I can't remember him sitting down ever on a phone call with me and teaching me how to trade. So I didn't consume any information from him directly. I've said that a bunch of times. I know it hurts his feelings, but we're adults. Get over it. If he helps you, he helps you. Honestly, I wish that, I'm not preying on anybody's downfall. I think he does a number of wonderful things. Truly does. Like, he's very, very good at giving out information. Consume it as much as you want or don't. Asking my opinion on it is not going to change that. And it's very well opinionated out there that everybody knows I feel that way. ES really picking up the volume now. I think this previous day low target is great. Yeah, I mean, the open is just what it is. Like, there's really nothing in here. It's very fairly delivered. Could have potentially traded something like this. This inversion here. But ultimately, with ES trading above this high, my stop loss being here into the open, I'm expecting Q to correct that divergences, Can you draw how you would draw the premium and discount? I actually did a whole video on that the other day on my Twitter. It's 2 minutes and 44 seconds long. If you go to my Twitter, scroll, you'll find the video, and it will show you exactly how I draw them and why I draw them the way I draw them. No, I didn't. We got stopped out at 9. What time was it? Let me just show you, actually. Oh, I didn't enable it. Yes, we got stopped out here at 461. So right where this starts. Going long at NQ. Previous day lows, this would be amazing. This was kind of what I was expecting, and just really sad that we get ran out of the open. It is what it is, though. Good read, good execution, bad management. But we move. Literally, today I was in, from the moment we got into this trade, I was in maximum 2-3 points of drawdown. Because Ninja keeps putting some. Okay. I'm never gonna be able to give you that entry anyway, because that entry would happen at 3 a.m. EST. Why did you adjust stop loss instead of waiting for that M15 pre-30 high? I just went over that, to be honest with you. I'm expecting that 930 move after taking liquidity and giving that divergence. I don't want to fade the trend. I'm a reversal trader, right? I have to be risk off when things start to get bullish again. And there's no denying that this 3-minute move here, this 5-minute move push up is quite bullish. Like, we traded lower and then we traded 245 ticks, or for those that use points, 61 points back open. And on ES, that's a 15-point move, taking out the previous hour high, right? I can't fade that. 70% of the time, 80% of those time, those moves just continue. It makes sense in hindsight to be like, why did you do it? But like, yeah. Do you still feel nerves or anxious before the trading day? Does it ever go away? It goes away. Why didn't I move to break even? Because listen, I got into this trade right here, yeah? Basically, here, I got into this trade. My stop loss was above this high, and my target initially was here. Yeah, there's a 4-hour trade. And I didn't come back to my chart until about 8:30. And my stop loss is just working and my order is just working. Either this trade plays out before 8:30 or I don't look at it. So why didn't I move at 4? The answer is because I didn't look at 4, like at this 4 o'clock, 5 o'clock though. 6 a.m. pushed up. I'm just expecting that continuation down. And now I want to see a pull back into this previous day low area, and we can potentially frame frame longs, and that would be great actually, because now we have that 10 o'clock candle. So now I just want to play that 4-hour candle and then reframe back up, right? We also hit discount of that range. I'm long biased from here. As long as we hit this. If this just moves up, I just play it back down. Well, let me rephrase that actually. I'm long biased from here, but I wouldn't play it back down because we hit discount. I want to see that previous daily low though before I can get an entry. No, I'm not waiting for an up candle. I don't just long up candles. That's like the number one way to lose money. I actually prefer to long down candles. I need to see some sort of aggressive move lower and then an aggressive move back inside of the previous day candle to then trade that daily candle, yeah? Any questions on that? Like I said, great bias, great trade, really bad management. We really got caught in that 930 fake, but that is trading. A lot of people get caught in that sometimes. A lot of people get caught in that and lose money. Luckily, we got caught in it and made money. I say I really accepted it was just me because not many people traded the line in a session today. Yeah, guys, if you have questions around premium discount, I would really just watch my YouTube, my Twitter video. Don't you think high of the week is in? I don't really like to predict high of weeks. Yeah, I think you guys just need to watch my video and you'll understand why. I'm not measuring from the gap, I'm measuring from this low. This gap move was efficiently delivered. We'll go over it very quickly, right? But gap up, efficiently delivered, held the low. Gap up, efficiently delivered some SMT, gives you that manipulation. That's the low. We trade up into this, okay, that's the high. If this is now going to trade lower, this would be the high. It doesn't, respects premium discount. And the long and short answer is this just doesn't ever rebalance the entire way. Yeah. Price trades all the way up and now comes back to rebalance price to that 50% level. Yeah, of course, definitely got gas, bro. 100% of course, it's tremendous amount of gas. Too much gas, actually. Inky dropped 200 points. That's great. ES is down 30 points, not even. It's down 20-ish. This is kind of how many out the bid of all the arse are slamming this morning. My standard deviation is drawn mainly on the 15, but I like to really make it as accurate as possible. So if we just use the standard deviation that kind of got me bearish, like, or looking for a pullback at this high, it was that yesterday drop below the open push up. This was the one that was completely rebalanced, right? If you were measuring this, you didn't get that break until over here. And at that point, this pushed a lot lower and it pushed as a new 15-minute candle printed. You notice that? 15-minute, this is the measurement. This is the drop below that 15-minute candle. And I just want to measure that and play the extension at two times that. So yeah, that's just how I do it. I like to look at the 15-minute. The minimum I'm going to measure is a 15-minute wick, right? So yeah. I want to see some stalling here, ultimately. Stalling, drop lower, push higher. I always trade 10 a.m. reversal. It's my job to trade it. Oh, if there's a setup, yeah. It's like I'm a day trader, right? So do I trade every day? Sure, but um, sometimes I might be prepping for trading or doing other stuff trading related. Doesn't mean I'm necessarily trading. How often do I trade London session? Rarely recently. The reality is that the volume during London is a lot less, right? So you're in a move for a lot longer. I mean, you're never gonna. You sometimes get moves like this, but they're very, very, very news driven. I just used the average daily range, the Asian range by Nico 948. It's a free indicator, and then I used the open high low close stat map by 2 degrees. That's a paid indicator. You have to subscribe to that one. Do you trade the entire session? I would always wait till at least 10:30 to the close session because I always want to wait for that 10 o'clock 4 hour candle. It's about getting into 10 a.m. trade just before as opposed to just after. Um, if you're trading the 4 a.m. candle just before the 4 a.m. candle prints, either you're expecting that 4 hour candle to continue because you wouldn't want to counter trade it because ultimately for me I would want to see the low taken and the most logical place for your low to be your stop loss to be placed is that low. So yeah, I think I would never really trade it before. I would always trade it after. Fear of losing. I don't really have a fear of losing anymore. Because it's just my cost of trading. I don't necessarily look at it as like just a cost, but like when I get into a trade, like this one, right? My question here is how much can I risk? And I want to risk 2K on this trade. In my head, I just paid 2K to be in this trade, right? No, it's purely based on structure. Based on how much risk or dollar amount your trade is up is emotional, right? When we feel that huge gap, I actually wouldn't mind it now, to be honest. I would like it to just continue into these and give us no buy confirmation here and go back down here because then I just get to like I'm long biased, long like medium term until 21K, right? So the lower we go back down here, the more I get to just replay all of this again. So yeah, and that's what a lot of people don't understand. It's like you can be patient all the way through here, or you can try and catch the knife. But when it actually gets to the area you wanna get to, then yeah. I mean, trading markets. I mean, I know you can be upset that I'm just talking, but I exited a trade for a 30-point win, and then I'm waiting for another setup to play out. And the harsh reality of this is that if you can't sit and wait for that, then you just won't make it as a trader, my friend. Yeah, I know he's addicted to the dopamine. You're 100% right, and he probably doesn't agree with that, but that's fine. But that just is what it is. Would you sell again if we yeah, well, I'm 27 years late. Well, oh well. You can always just mute me, honestly. Like, would you sell again if we push up to the 5 minute FUG? No, I would want to buy. I want to buy, right? I want to buy here. Like, I want to be a buyer in this area. I'm just waiting for it to play out. The entries to play out. We hit that 10 a.m. level. I wouldn't want to take this before with this previous day low just resting there. Can you talk about how you execute entries? From what you said, it sounds like you don't use limit orders. I do use limit orders. I prefer to get stopped into a trade. It doesn't necessarily mean I always get stopped into a trade. And people are going to be like, oh, so you're a breakout trader. No, I'm absolutely not a breakout trader. When price trades into my level, I just want to see that start to trade back down. Sometimes we just trade into it and it leaves me and I have to get a worse entry, right? But that's just the way it works to me. So realistically, what I want to see here is I want to see price just go sideways a little bit. And then a big push lower and then a big correction, and we just trade that correction. Are you looking for a sweep of H4 and CSD into a version? Okay. Are you looking for a sweep of H4? Yeah. Then CSD? Not always. And then an inversion back up. Or yeah, I mean it's a very simple version of what just happened, but yeah, obviously there's some discretion involved there. Yeah, I mean look, I'm gonna be honest, right? I don't really buy into this equal low stuff. So that's just me. No, it's not even that I don't agree that they're equal lows. I mean, there's no disagreeing that these lows are of the same value, right? The low on ES right now is 805.50, and we haven't traded into 805 today, right? Not yet, anyway, right? 100%. However, if your stop loss was at 805.50, you just got stopped out on this last candle. There's no like they don't have to deviate that. All it just means is that there's someone buying your stop there. There are enough orders that are holding the market in that place. That's it. The rest is like equal lows, like drawn liquidity. Like I don't necessarily agree with that. In fact, if this buyer just wants to buy this up now, like, then what? Is this valid SMT? Yeah. SMT is just a divergence, right? That's all it is. So look at this. All I want to do is I just want to try and long this asset below this orange line. Well, I dragged that way too far out. Yeah. I just want to long this asset below this line because this will eventually form the wick. Do I believe there's an algorithm? I believe there are many, 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 many algorithms. Do I believe there is one single algorithm that controls the market? No, it's a free market. Whoever has the most money wins. Would I want ES to take previous day low? I would love one of them to take it and the other one not. I would love that. Premium discount of the current drop. Traded into, this is the high. Trade into this is the high. Fair value, this is the high. Fair value pushed up. You see how all of these moves were efficiently delivered? Pushed up, discount. Discount. It's this. This is the drop. Yeah, I mean, I don't believe that. You're right. It's not considered. Look, I'm not saying it isn't considered what someone else considers it to be. I'm just saying I personally do not agree that there is one singular algorithm or that basically hunts these equal lows, because ultimately the logic that I have for it is if you have your stop loss there, like if you're long, let's just say you're long, right here. Where are you going to put your stop loss? Okay, you can form fit and say that you have your stop loss at the low plus one tick. Oh, that was a profit one I took moved. Plus one tick, and you didn't get stopped out, right? You can form fit and say that, but it makes no sense to do that. It makes sense to have your stop loss on that level or just before that level, right? So if you here, you got stopped out because unless you have like some advanced way of setting a sell limit here, like if this area hits this, you then sell when your entry's above. I don't know. It's just a market order, so just execute it into the book. So all this shows me is that someone here is present buying your order when it gets stopped. Tuesdays and Thursdays, I'm live inside the lab. Mondays and Fridays aren't my best trading days, so I just try and avoid them. And I definitely try and avoid sitting at my computer into, yeah. Honestly, you're never going to get me to say something controversial I don't believe in. And that's just the truth. Like, you can try. Yeah, I'm just stuck in my ways, and I like to trade on TradingView, despite many large personalities on Twitter saying that no one trades size on TradingView. Fine, I'll get you. Hit previous day low on it on NQ now, so now I'm just. There's also divergence here, so now I just want to I want to see some volume lower to give us some sort of entry below this orange line, which I'm gonna now just change to blue. I want to be long below this blue level on the basis that it trades higher. Yeah. Do you have any advice for dealing with drawdown on an open position? Don't look at it. Almost no one on Twitter trades any real size on NQ. Sure. Okay. What would you determine size? I mean, you ran up a 10K account into 100K. I can guarantee you traded micros. That's like not even moving the market. I'm not going to, Eric, I'm not really going to answer that. I acknowledge your question, but I'm not going to answer it. At 3:33 in the morning? Yeah, I'm not in the US, Drake. Also, I don't claim to ever have size, but yeah, I mean, I've traded 250 cons on NQ for about a month straight. So by your logic, I trade size, which I don't think is true, but yeah. Appreciate you, Benny. I'm looking forward to my Florida trip, actually. It'll be good. Is NT pairing with TradingView now more? I don't think so. I'm going to be honest. The TradingView thing is a me thing. Everyone else trades on NinjaTrader. I just need to get more familiar with the platform before I trade on it, and that's just the truth of the matter. Right? I don't want to make some silly mistake because I'm not familiar with the platform. Yeah, if you're trading over 100 contracts, the margin requirements for most of the brokers change. I don't actually know what that is on NinjaTrader. We haven't got there yet. So, how do you split the screen? So up here, there's just an option for millions of options. So you can have it set to an unlimited amount of options if you want. I just have it set to 2. Yeah. So. How do I deal with fear? Like sometimes I see myself showing and I don't take it. Your job's not to be scared. Okay, they both just took it. This is what I want to see. I want to see this push. so we can buy it once it comes back. How do I deal with fear? Like sometimes I see myself showing and don't trade it and it plays out really good. I do back testing a lot. Your job is to just identify your model. Your job's not to be right or wrong. Your job is to identify your model and then let your model play out. For our busy. Yeah. It's crazy. Yesterday when I was like, weekly gap looks good from here, everybody was like, not this week, Kane. We're only going up. Crazy. It's cool, man. We all have a preference. Didn't mean to make you feel good. No. Look, honestly, guys, I'm not. I don't take anything in an offensive way. Don't worry. The only thing I would take offensive is if you were offensive, right? Like you were just calling me names. I'm just sometimes a very blunt to the point person. Yeah. Why draw a new premium discount if you're rebalancing the actual range? Because everything is fractal and we would just rebalance this range once it delivers. Yeah, once the divergence forms against us, you have to de-risk because that's also the basis of the model is the divergence. We got into a trade because of NQ diverging on that daily. So if we're now diverging at a solid low 4-hour level, we would just simply de-risk the trade. Jeez, so many questions. Sorry, guys, I'm trying to keep up, but it's a bit painful, actually. The SMT indicator that I have is a private indicator. It's not available. Apologies. Sorry. Maybe one day. Actually, I just want to see this stall here, right? And once we're below this, I just want to see, like, for example, this. Oh, I don't even know why I'm moving this SMT. It's not valid anymore. Oh, divergence, whatever. Yeah. The indicator is private. No need to be greedy in trading. If Monday goes a good trade, walk away for the week. I don't necessarily agree with that, but it depends. If you're happy with that, then it's good. I need a girlfriend to man the chat and read questions for me. Yeah, I think a lot of people say that, but can you call this move to a T? You just got to plan it, right? You got to plan the move and then do whatever. Sadly, like I said, we got wicked out. It is what it is. At what age? I don't really want to answer too many questions about my age. Sorry. It's just, yeah. It took me about 5-6 years to start making good money, right? 40 ticks a week. Honestly, I traded 100 ticks a day. Like as soon as I got 100 ticks a day, I stopped trading. I did that for a long time, and it helps. You just try and get your one move for the day and be done with it. It's greed is the number one thing that will kill you in the long run, right? This stop loss is massive. Did I get the shorts? I caught some of it. I caught about 130 ticks of it. Unfortunately, our final target just got hit, but yeah, I sadly got ran out at 9:30. My model, I've gone over it a few times, but I'll do it again. Is I just want to wait for a 4-hour candle to form, and I want to play the reversal above or below that 4-hour candle with context. So I'm just trying to trade the wick of that candle. So for example, if we look at this currently, we can explain the logic here. We want to see previous day low hit. It also is discount of a range that we have marked out, so 50%. So that's this low, which also aligns with that previous day low. So then I just want to wait for the 4-hour candle to form here, right? This blue line, it forms, it wicks higher, right? And then now we are trading lower. I want to now trade the low of this because this previous day low was obviously resting there. Now I want to trade that 4-hour wick. So if this candle was to flip bullish, we're in the wick of this candle, right? Our job's not to predict when it will return. Our job is to just trade this from here to here. This is a horrific trade. Could be in this right now, to be honest. I'm probably not going to do that. Because I would wait for the next 15-minute candle to form and then trade that after, and then trade it after. So now all I'm now looking for is this, and then I get to trade some sort of inversion in here with my stop loss being a lot lower. And if this just runs without me, I'm okay. I've got a win for the day and I'm good, you know. But ultimately, I want to be a buyer here. My validation is a bit low. I need to see that confirmation that this is going to move. Will I swing futures? Yeah, to a degree. I don't an awful bunch. Yeah, 100%. I think you can learn to start making money if you put a decent amount of time in it for 6 months. I think you can find some success there. You're not going to find you're going to master your own brain and emotions in 6 months though, and it's an emotional game. I think it's low probability for lower, yeah. This is nice. I'm just not in it. Do I think a 10 losing streak? I think 10 losses on the bounce is pretty bad. I'm gonna be honest. It depends. It really depends on your data, right? Do I think the risk is more important? No, I don't actually. I think it's good to have a risk management plan, but I bet more on my more confident trades. That's just how it is. Still have a risk management structure. Wanted to get out, wanted to get in. I don't really trade in terms of percentages. Controversial, sorry. But yeah. I think so many buyers are stepping in at this daily level. Any order flow traders that can confirm that? Where's Leo when I need him? Look, honestly, there's a lot of information out there to learn from, right? So many. Lots of absorption on the lows. Yeah. If we close here, I think I would stab this on the basis that we don't trade back to this entry down here. And then I can trade to here. I'm compromising on my stop loss a little bit. Lay on demand. I need a little button on my desk, like bzz, Leo just comes in. Or he can just teach me that he's going to do next week because he's a legend. He's going to help me out. I'm going to go very light risk here. I just need to see a closure above this level. We didn't see a closure yet, so sadly it's no trade for me, and this will just limit. No, I appreciate you, man. And if you guys don't tune in the afternoon streams, I personally have been tuning in, although I don't really trade those sessions too much, and I'm just learning a bunch off those guys. So if you any volume based traders or or you any sort of questions for it, Power Hour is a place to be. Yeah, because I'm framing the SMT and I'm also playing a continuation. For those that know me, this is just continuation model, right? And I'm just framing the this from here because it's a higher time frame. No, I'm here every Wednesday at the open. Yeah, I mean, I just wanted to see this gap, right? Okay, we'll play this. $460 risk. We're up 3K on the day, giving back 500 to play a part. Yeah, I don't do afternoon streams. No, I very rarely trade past 11 o'clock. Very, 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 very rarely. Something has to be like nuts for me to do that. Look, the 3-minute is crazy big, yeah, and the 5-minute is also quite big. I want to be long. I want my invalidation to be as low as possible, right, in the wick. In fact, I want it to be the extremity of the wick. This wick, even on the 5-minute, is 100. It's 27 points. So like, if we take that down, this is the 5-minute wick, right? Open of here, closes at 26. This is just the 5-minute wick. I don't want to see us trade back down into that area right now, because if we do, we're wrong. In my opinion, we're just wrong. We're back. We're below that previous day low level. Buyers should be stepping into the market here, and we should, based on my understanding of the way that price works, we should trade up into some of these highs up here. This is a lot of resting liquidity. Sell orders that we're expecting, that new week opening gap, that weekly open level, or whatever you want to call it. Their resting orders are here, right? We're trading into pain. We like pain when we're on the right side of pain. Yeah. That's it. That's normally how it is. I trade that pain. If you were short in and around here, where's your stop loss now? Resting somewhere here. Boom. Let's go after them. You know? I mean, this will be my last trade, right? For the day. No matter what. 2 trades done. Win and a loss. I'm planning on it being a loss, you know. And then we will move on from there. We get a closure outside of here. So the 3-minute should close in 51 seconds. So we get a closure above this. We'll make it orange. We get a closure above this level. Then yeah, it should be good. Trader pain. Okay. Yeah. Is the SMT with the 2 trades a day max? Yours is 1. We're different people, though, aren't we? Adds layer button to Stream Deck. Damn. Yeah. I need one of those. Need one of those Stream Decks. You know what I mean? To add the button first. But yeah, I appreciate you for doing that, Leo. It's good. This should be a good level to trade into. We didn't get that closure, so now we have to wait all the next 3-minute candle to see it. Or we could see we're just at another level. The 5-minute closes in a minute 50. Also, we can just do this, right? Just add a little M5 above this one. So we just need to see that 5-minute close above this level, or the 3-minute close above this level. So the 5-minute close is here, that 355. When would I move my stop loss to break even? Probably when we trade back up into the open, this 10 a.m. open level. Oh God, I've dragged this a mile away. I don't know why I keep doing that. Yeah, that 10 a.m. open, because I'm trading the wick. Once that candle flips bullish, I wouldn't want to see that come back down. Is this some a must? Look, when you're grabbing a reversal like I did like this morning in the London session, yeah, you need to have that SMT. Why? Because that to me gives you that. Oh, look, you don't need to. I prefer it. That's my condition to get into the trade. I want to see those divergences on a significant time frame between those assets. That's it. Once that happens and we start to break down and we get that inversion, then I'm clicking the button because that's my model. Maybe undecided on the YouTube content. It won't be a lot of educational content. So yeah. ES on the struggle bus. Oh no. Oh no. I actually like it, to be honest. I think ES. Oh, no, do I not have the level? I mean, look, this is the rest. Nothing really changes for me until this level, sadly. And then if we get closures above, then yeah, we did not get the 5 minutes, so now we just have that 3 minute to save us. Do I draw the line yourself or the indicator? The SMT is sometimes drawn by either. It depends on which. The indicator obviously has a logic for drawing SMT based on the logic we put into the indicator. But there are other SMTs that sometimes it doesn't pick up or it prints the wrong SMT. It's not perfect. That's hence why it's private. Once it's perfect, whatever. Because I don't really care about yesterday's London low. Why would I care about that? I just care about yesterday's low, which we're already below. Like I said, I trade the formation of the wick. I understand that that is risky. Like, hence why I'm risk off a lot of the time. But like, yeah, that's just how it is. I won't be running a mentorship this year. It just won't happen. I'm way too busy with lots of other projects. So yeah, my stop loss is here because this is where I would have liked, well, not liked to have entered, but I would be break even on this trade once we confirmed above this level. So this was an inversion down here. I would never take this small one. I would always wait for this large one. So the logic is that if I took this small one, I wouldn't want to be risk on from there, you know? Continuation because the overall trend here is up. Trade into 50%, and then we just look to then trade that continuation trade, right? There's so many divergences in here. I don't really know which one is the best one to use to draw standard deviation, so I just avoided doing any of them. But if we go to the 15-minute and mark out this low and this high, because that is it, and run standard deviation, we're around that -2, -2.5 level. Yeah. So it's that, right? -2, -2.5. I just want to be positioned in and around this area, back up into 50% of the range. And I will always bet my money on that. Yeah. And that's why it's a continuation. So then that doesn't have to be that divergence. I'm not from Kent, no. And I'm not going to tell you where I'm from because that would be silly. Which of your models would you recommend for beginners? I only have one model. Yeah, I don't live in Luton, sorry. I only have one model. My model is definitely not a beginner model, right? You're trading a reversal. I would never ever recommend that a beginner start trading reversals. I agree with what Merritt said yesterday. He only trades tops and bottoms because that's where his model works the best, right? And that's the way he does it, and he manages his trades the way he needs to manage it. Like, would I recommend somebody just getting involved in trading try to time the market? No, because you will be wrong every single time. You might get lucky once. Would you say most people in your Discord are profitable? It's a very good question. I would say there's a large chunk that are making good money, but there's also a large chunk that aren't, and that's why they're there, right? If everyone in my Discord was making money, then there would be no need for my Discord. It's an education space, right? It's not a trading space. It's not like a space that you come and just to copy my trades. Like, I'll never let you do that. I also don't share my trades, every single trade, you know? Like, I didn't share my London trade from earlier. You either learn and figure that trade out or don't. If you ask me, hey, is this the model? I think this is the model. Can you tell me why it isn't? I will always say to you, it's the model. But I'm never going to tell you, yeah, it's the model, you should be in that trade. Nope. There has to be an element of responsibility in trading. I can help you figure stuff out, you know? What I think of macro times, I think that when you are trading the wick of a candle, the macro times make sense. Do I believe that the 950 to 1050 or the 1010 macro. I don't know if those 20 minutes are magical. I would say that the first 10 minutes of a candle are are the more important thing than the last 10 minutes. If you're asking me that based on T-Trades' tweet yesterday, I 100% agree with everything he said, and we've spoken about it at length multiple times. I'll give this as much as it needs. Look, this is my logical break-even point, right? Everything's logic in my head. This is an area where I logically makes sense to go break even. Until this level gets hit, this level is the only place I can exit before. Once we hit this level, I will just trail this up to a low. Probably not this low because it's actually no, that low just makes sense, you know? Yeah, they're hating on T, but T is 100% right. And I know a lot of people don't agree with him, and that's okay, but he is right. Everyone's form fitting. You ever got into a trade just before the hour, got wicked out, and then trade round? Well, price is trading pain. I'm just a big believer in the market. Market pain will almost always cause the most amount of liquidity. He does have some of the best, if not the best, trading education for the way that a lot of people trade on YouTube. Yeah. If you go there looking for volume stuff, you're probably not going to find much there, you know? Yeah, look, he's one of my very good friends. I'm never going to say anything other than he's good, you know? Yeah. Yeah, it's all free, all on YouTube. We're going to get this 3-minute closure. Can you believe it? We finally got it. 3-minute closes above. This should just pick up now. Then we should get that 5-minute closure, and then we should trade back up into this open. And then I break even, and then the rest is the rest. Yeah, he puts a lot of time and effort into it. He's there, but he's not like he's not there in official capacity. He just checks in from time to time. T is a guy called T-Trades. He has around 300,000 subscribers on YouTube. And the whole YouTube channel is just all education. No, I like to, everything's fractal in my head. Like the chart is nothing in the chart is all aligned to one time frame, right? Like you could trade the yearly time frame if you really wanted to, right? You just be there a very long time. You'd be the most patient trader in the world. I trade the 4-hour. How does the 4-hour align? I just go to the 15-minute, and then I don't like the 1-minute, so I align the 15 with the 3. So for me, it's 15 forms. I want to see this trade back up into here, and if we sell down, we sell down, and then this should do this, right? And then I just fractalize it, so 15, 5, and 3. But I skip the hourly, especially when there's a 4-hour. We're in that 10 o'clock hour. I don't really care what the hourly does because the 4-hour is going to tell you what the hourly's doing. I think the reality is everybody wants to scale their risk management plan. If something got you to 100K from whatever amount of money, I would stick with it until it gets you to 500K, and then you can think about it. But by that point, you would have figured it out. And if you're trading proper accounts, I would just be a lot. You'll hear me say this a lot: defense, 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 defense. You know. Find a reason to get out of your trade. Instead of finding a reason to stay in it, have your model click the button and then find a reason to be closing it. And if you can't find a reason to close it, the model forming against you, you're trading into an area you don't like, etc., 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 then stay in it. No, I won't close this because like there's no reason for me. I've already done that, right? What can happen here for me to want to get out of this trade? Well, nothing. This is the area that I want to get in. I compromised on my entry to get into this 1-minute inversion here. I compromised on that. We're just drifting sideways. something like this maybe, and then I get to go break even. If I just close it because we're going sideways, it will just play out. You know, it will cause me pain. I need to endure the pain and trade the pain. Market maker theory. Favorite day of the week: Tuesdays, Wednesdays, Thursdays. Can't favor one of them. Trade all three. I like ones without news the best. Yeah, I'm not going to get into those sorts of questions. Sorry. I don't support football. Using 50-minute with the 3 sounds like a smashing idea. Yeah, it's pretty good. On the tick chart, that pop is at 266. Sorry, would you add here more ideal marketing conditions? I would add based on if my entry was down here, I would have added to this. I don't want to be too big sized. I like this though. I like the trade below this 5-minute, 1 minute, this. I'm just going to go to 30 second quickly. Yeah, this is the area that people would have rested stops in, right? If you're long here, you don't want to see this low targeted, right? So to me, this would have just made the most sense. There's actually divergence here. So I'm just going to move my stop loss to the low of that divergence. And then based on that, yeah. Trade this back up into 10. This is a trade that I would consider taking if I wasn't already in a trade. Yeah. Like, again, like the old saying, you should probably just put your entry where your stop is. That will always work most of the time. What a sentence from me. Can't English today. But yeah, the times that plays out, it will feel a lot better, and you'll get much better entries and much better stops. Because pain, it's just a pain thing. And that's why I want to trade this 4-hour candle, because it causes pain to the downside. And if I'm wrong, my invalidation's tight. I don't have to wait for price to reclaim most of the move. Yes, it's heavy. It's not looking too good for this. But we are coming up to the 11 o'clock hour. So price, not in my experience, price stalls around 11 to 1, so. Or is the answer to your questions that you're talking about in chat is consult a professional and figure it out with them. I don't think anyone here is going to give you the advice you need. Yeah, definitely consult a question if you look at Darian's answer and think, yeah, that's a good idea. Definitely don't do that. Yeah, this is really stalling. ES really heavy. NQ really showing some rounding momentum here, I guess. I like this. I don't like that we're under this area. I really wanted to see buyers step in and be present here. Looks like they're not. What is the 1 week the 1 week? This is the weekly manipulation level. We're above it. This is the stat map, so we're above this level. Don't really care too much about that. It just measures the weekly open and projects where the weekly wick is likely to form. We were way above that. I think we actually hit the weekly distribution level. No, we didn't. No, we didn't. So yeah, it just gave me the bias of weekly manipulation level. We actually didn't hit the daily manipulation level. Daily manipulation level to the downside. So yeah, any questions? Like last 10 minutes, anything super urgent that people wanna ask, wanna go over? My stop loss at this level based on if we were in this trade, and this is not the best logic, but this is just how it is. If we were in this trade, I would be break even here, right? Say we got into this trade right here, I'd be break even here. I don't want to see this then traded into once we're up here. So for me, we got into this because we inverted this inversion. My stop loss would be here based on that logic, and I just want to see this trade into here. Compromise on my entry. So yeah. Any advice? What you struggling with? You need to understand. You need to fix the you need to understand the problem before you can fix it, right? Of course, trading is pure. Like, listen, if there, I will say this, and this is just my opinion. If you do not have any intuition about your trading, take the time, put it into a bot, and let it run. And just do that. If you can't do that, then there's some intuition in your trading. Put it into an algorithm, take everything out, just do the thing. How do I get the manipulation indicator? It's the statistical map by 2 degrees. I think I don't know what the website is. Apologies. I think it's 2degrees.trade. Personally, my personal strategies. One, I trade 3 though, like strategies, models, whatever you want to call them. I trade 3, but 2 of them aren't mine, and they haven't been like I haven't done extensive back testing on them. Just 2 of my close friends trade those models, and they fit a similar move, right? Stop loss is at this level because that's the stop loss that I want to play. That answer has changed because I do not want to re-say why. The stop loss is here based on number of reasons. That pain, very deep retrace though. I would like to have seen a shallow retrace and then yeah. Definitely tune in at the close around 2:30, 3 o'clock, with Leo and Nick. I will be there for sure. Hopefully I can watch those guys grab a banger. I just need to mark out 10 a.m. on ES because if 10 a.m. gets hit here, I would also look to go break even. And there it is. Sweet. And break even. Whatever happens, happens. Yeah. My stop loss is 2.5, 2.25 points in profit. The rest is the rest. Yeah. When we go on this size, just de-risk. We're up for the day. We don't need to bet more. We can bet less. It's the move. How much were we risking? Like $400. What was the risk to reward on the trade? $400. We made 1.5K. We'd be up 4. Done. Up 4 in a day, you know? It is what it is. Apologies, I was in the trade from way earlier, like when I came in, but that's just how it is some days. I'm in the trade early. I don't take partials. This trade will either stop me or sell me out either way. It's gonna stop me or limit me out. There's no in between. I may come to this in an hour's time and it's going sideways, and I'm like, I hate this. Goodbye, and just close it wherever it's at. But I don't. But I know I'm not going to lose money on this trade now, so I can go water my grass in peace if it hasn't rained since I've been up here, and be done with it. Pack for Florida, fly to Florida in the morning, and yeah, man's talking about watering his grass again. Listen, If you tune into my Instagram, you get to watch me water my grass consistently. It's one thing in my life, I'm consistent, you know. My TP level is discount, all right? Discount at this range. If you don't understand that, watch the video on my Twitter. It's 2 minutes and 44 minutes long. And I just want to see 50% of this before potentially continuing. And then, yeah, why am I break even? It's a risky trade here. I'm trading the reversal. And if we come back to it, I don't want to be in it anymore. I am not going to Ultra Miami. Sorry. No, I'm not. I am going to Miami, but I'm not going to the Ultra Festival. So yeah, this trade plays out. We're up about 4.5K on the day. If it doesn't, we're up 3, a little bit over 3. I know some of you are going to be like, Kane, you could be up 20K. Yeah, sure. I get it. I understand that. But we got stopped out at the open. And that's just how it is some days. And I'll sleep easy tonight knowing that I made money today regardless, you know? There's no point thinking about the what ifs or the could be's or whatever, you know? We can go over that trade. 4 hour chart, daily divergence. So if we look at ES, didn't take out that previous day high. Ignore this red line. It was broken. The contract changed, messed it up. So this previous day high area, this is previous day high. This is previous day high. NQ took it. ES didn't. Give me my short bias. This 4 hour inversion up here. Ooh, up here is the area that I want to sell out of. We traded into it. We then ES picked up, took out that high on here. We were in that trade. Stopped just above this 4 hour high. We were risking like $500 coming into the open. Once we dropped lower, we trailed, went break even. And then 930 came on. 930 came, traded lower, traded into this low. Yeah. Our take profit was namely around here. Yeah. And then and then basically we got wicked out here. I didn't want to see this. So if we go on the 3 minute, I didn't want to see this high get traded into. We traded into it, boom, and then move went with ours. The end. That was it. Everyone missed my first trade because I was already in it when I came to the stream. And I was in 5 contracts. So I was risking like 2.5K. So yeah. No. It was 5 contracts. It was like 30 points, 40 points. Floating P&L right now is $3,516.
Hey, Kane.
Hey, Jim, how are you?
Great job, man.
Appreciate you.
Yeah, I know. It's I've talked about this with some of the other new folks that I've met, man. It's hard to trade live in front of a whole bunch of people.
Yeah, it is hard. I mean, I've done it for 16 months now, 17 months. But yeah, I mean, I remember really looking back on it very early on, and it was tough, especially when you start to size up, you know, when you're risking a couple of $1,000 and an eye-watering amount of money on a trade that you're comfortable with, but you're probably not comfortable to risk that much in front of people. I am guilty of that. So yeah, but overall, good day, especially for me right now.
Yeah, awesome. Well, that was fantastic. I love the little nuggets of wisdom that you throw out also. All that stuff is just so on point and so important to kind of go beyond the regular technicals and talk about, these other intangibles.
Yeah. Well, look, yeah, the way I feel about it is if trading was as black and white as winning and losing all of the time and no emotions, no greed, no nothing, then everyone would be really good at it. And the tangibles make it hard, right? So it's really important to speak about them.
Oh yeah, no question about it. There's so much that goes into it. But that's the great thing about the stream we have going in the NinjaTrader Live is we get these great words of wisdom from you guys. I'm going to call you guys the new breed of young traders coming in.
Yeah. Well, I'll take it. I don't get called young often, so I'll take it.
Compared to me, most people are. So.
Okay, fair enough. I would never call you old, Jim. Don't worry.
Thank you. All right. In any event, thanks, Kane. Looking forward to seeing you again. We're going to move to our next segment, which is hot commodities with Shai. So again, we appreciate everything you do, man.
Appreciate you guys. Have a good one. See you next week.
All right. We are back live, I believe, with Shai from Naples. How are you?
Hey, Jim, how you doing?
I'm pretty good. I'm pretty good. Great morning so far this morning. It's been some interesting markets today.
Absolutely. Commodities have been the movers.
So
Let's
Tracy, hey,
talk.
I got a
let's-
quick, before we start, I got a quick question for you. Sorry to interrupt.
Hey,
I saw that coming across the stream here, I saw that the Dallas Fed does a survey on energy, and I guess they announced today businesses expect WTI oil price of $68 per barrel at the end of 2025.
yeah, I'm gonna go over all the numbers on the stream, but this is just a survey, right, of companies involved in the industry, and it can vary from month to month depending on sentiment. So a lot of sentiment is kind of negative right now, right? Everybody's expecting some sort of recession and brought upon these tariffs. And so that's just kind of the midline. If you actually look at the survey, a lot of them said much higher,
Okay.
but yeah. And I'll put a bunch of information on the ticker too about the survey. But going on, we just had crude oil numbers, so let's take a look at that first, right? We had great numbers. We had draws across the board, minus 3.341 million for crude, minus 775K for Cushing, minus 1.446 million gasoline, and minus 421K for distillate. So good numbers. We didn't really move that much off of the initial number. We're kind of ticking higher a little bit, but no big move. Expectations was for 1.5 million, but I think we kind of had a muted move because of API numbers last night. Gave a very big expectation of minus 4.6 million. So, but overall, this market looks strong. We broke out of your sandwich or hamburger. So, what are the technicals telling you right now?
Well, I'm looking at an intraday chart right now. I have a 30-minute candle chart of the front month, and we're right at that kind of psychological $70 level, right? And that's right where Jack's 4 is, which is a which is a mildly important gamma exposure level, which is right at 70. So we're right up to it right now, and it's looking strong still, right? And we have a couple of targets a little bit higher. We have that a blind spot as well as the 1-day max for this is the Menthor Q calculation at 70.11. And then we have R2 a little further up, but within reach. It's 70 spot 29. So we're breaking up and out of the opening range initial balance right now, and buyers are getting busy.
Yeah, and earlier today we did get Bloomberg did come out and say that March 25 to 31 is set to rise 0.6% week on week for jet fuel demand. That's up 5.3% year on year. So we are still seeing demand, and people are obviously still flying. So we haven't quite seen this weak economy yet, except for the consumer sentiment part of it. But let's take, since we did guess.
Tracy, let me just jump in really quickly here. So on the jet fuel side, now I'm planning a trip overseas in September. Should I buy my plane tickets now, or should I wait until we get a little bit more relief?
I don't want to be the one to make that call.
Fair enough. Fair enough.
Okay, so let's move over to gasoline since we have those numbers today as well. And again, we're seeing gasoline make a much higher move than crude is currently. We had a big gasoline draw as well. It is still refinery maintenance season, so it says something that we had such a huge crude draw and such a huge gasoline draw at the same time. Now, we did have imports down a little bit, but still, generally, this is kind of still build season for crude oil. What's this
Okay.
chart looking like to you?
Yeah, I mean, this is again a 30-minute intraday chart on RBOB. I mean, we're literally just, driving up higher. We had a really nice kind of price stability for a little while today, but it's really only approximately an hour's worth of trading where we kind of did a lot of volume at 2.2393. And then that was it. Buyers came back in on this previous candle's wick, pushed us back up, and this buying is still continuing. There's R3 is really the next target. I don't have options numbers for this market, but R3 is the next target up. A long way to go here, but this is looking, at least today, it's looking like we're breaking out to the upside.
And we're headed into summer driving season as well, so not surprising. We'll see higher gasoline demand over the next few months. We obviously can't not talk about copper today, right? So we had overnight.
Absolutely.
What happened? Overnight, what happened is we saw Trump say that copper tariffs are coming in weeks instead of months. What initially happened in February is the administration said they were going to give 270 days for a review to decide what they're exactly going to do about these copper tariffs. That would have put tariffs coming into play around September, October area. However, that's moved up a lot. And so, of course, overnight, when that news broke, we saw a huge copper spike broke all-time highs. We are coming back a little bit. What is this looking like to you?
Yeah, so on a daily chart, Tracy, I mean, we just had this big astronomical, drive higher. All the moving averages are just arcing up higher. We have a double top at 5.20. But today's candle's interesting, right? Because we surged pretty high up, and probably because of what you said. And now sellers are kind of bringing us back down to where we started. So it's going to be interesting to see if we get sticky at that 5.20 level or not, or if this even turns into a little bit of a temporary turnaround. But other than that, looking for places to buy Dr. Copper. And then going to the intraday chart really quickly here, we have a lot of lines, a lot of levels for traders to consider. And by the way, you could trade micro copper, everybody. We're sitting on call resistance. These are 0 DTE call resistance and gamma walls. We talked about this a little bit this morning at 5.25. Put support's even lower than that for 0 DTEs. And then we have previous sessions highs. And then Jack's one all the way down here at 5.2, which seems to be the magic price for now anyway.
Yeah, I think so too. I mean, we'll keep a close eye on that daily candle, but it does look like we hit some sort of exhaustion and maybe get a little bit of a pullback, but again, still very bullish on this market. Let's move on to gold. Just because we're seeing a little bit of weakness in gold today. And it looks like we've kind of just been consolidating. I mean, the fundamentals obviously are still there. There's still a lot of uncertainty in the market, but it seems like this week we've kind of just gone sideways. What are your thoughts on this?
Yeah, no, I agree with you. We are kind of consolidating right now, and I'm going to just call the base at about we'll just round it up to 30.15, and that top of the bodies of the candles are around 30.27. So a super tight range for the last 3 days. One thing that's kind of interesting is the bodies of the candle are getting smaller, right? We had a big body of the candle on the 21st, then a smaller body, even smaller body inside bar if you're going by the candle bodies, and then even a smaller body today. So that right now it seems like it's either a case of price happiness or price uncertainty, which isn't surprising going into this, supposed, revelation, what I forgot what they call it, Liberation Day or whatever, April 2nd.
Right. Liberation Day, April 2nd. I don't know. It kind of looks like it would be interesting to see if it, it looks like it broke out from your rectangle area. It would be interesting to see how it reacts if it goes back and retest that level.
Yeah, so that was resistance. I dragged it across. It was long-term resistance. I dragged it across because a lot of times this long-term resistance becomes long-term support. And I just kind of line it up with the fib. I have a short-term fib on here, 38.1%. So the only thing that would bum me out if we did retrace back down there, it would be a textbook normal thing. I wouldn't freak out. But that 8 EMA is so important, and we're just dancing, we're just walking along it right now. So we'll see if that holds or not.
Definitely. And let's move over to the silver market. We have silver up today where gold is relatively flat, slightly down. What we've been talking about this market for a few days. Everybody knows I love the silver market. To me, this chart still looks really bullish, even though we still have that resistance at $35. Does it look like we're going to make another run for 35?
I think it definitely, I mean, in my opinion, I think we're going to make another run for 35. I mean, we had this kind of really nice retracement. Really, we were sticky at the 21 EMA. We wicked down to the 50%, which I love because buyers came in and rejected any further price movement down. Then we had a pause. And then yesterday was a pretty big benchmark candle right now. We're trading above it right now. Small body of a candle again, just kind of like gold, but looking way different. This looks like the trend is pretty positive right here in silver. And then just driving down to a 30-minute intraday chart. This is really why I love these numbers. And we saw this last night in the E-mini S&P at the close, where we ended up touching that JAX 1 level at the very end, almost the very last minute. And we see it again. We see the JAX 1, 34.50. That's the biggest gamma exposure level on this chart. And we touched it. Sellers brought us back down. We're kind of sideways. Really nice volume profile, though, Tracy. I like this point of control here at 34, spot 275. So we'll see if we'll probably go range bound today, but maybe not.
Well, we'll see. And we have a little bit of time left. I wanted to let's look at palladium. If you can bring palladium up, because that's another big mover today to the upside.
Yes, ma'am. I could do it. Here's a daily.
Yay. So yeah, so it looks like it's wants to maybe try and break out of your hamburger bun once again. Do we make it over? What does this chart look like? I mean, how many? It looks like we've kind of tested that top end of that range quite a bit. So is the next one a go?
I know, and there's two trains of thought on that. I mean, one train of thought is if you chip away at the ceiling enough times, you're going to make a hole and shoot through. My experience is wait for that breakout to happen because we could still be range bound. Look at the moving averages; they're all kind of sideways here, kind of tangled in love a little bit. That's a 200 simple that I added on your suggestion, which was a great suggestion, by the way. We're right up against it. So, I would probably say, hey, we get a close above this 968. Is that? No, I'm sorry, 988 level. Then I'm gonna jump on the bullish bandwagon here.
I like it. I like it. And while let's just do all the metals today. We'll take a look at platinum really quickly, which is pretty much flat on the day. We've been following this over the last couple of weeks. It seems like platinum's got the doldrums that gold does, kind of nothing today. We're kind of at the bottom end of that range, that pullback. Is this looking more bearish or bullish to you?
Well, right now, okay, so we have a double bottom here in the short term, right? Starting at March 7th, then again a couple days ago. You had a nice rally up, but sellers rejected that. Now, we have a doji candle right now. In other words, there's no price change between the open and now. And a really kind of weak attempt to try to rally yesterday. So to me, this is looking bearish right now. And we'll see how this candle ends up. But I wouldn't be surprised if we try to attack the bottom. This is not really a hamburger bun. This one's a little lopsided. Somebody didn't cut the bread right on this one, but I wouldn't be surprised if we drove back down to that 963.9, assuming all the macros stay the same.
Yeah, I mean, if we, again, I love that 900 to 950 area. I know that's kind of a wide range if you're a day trader, but that area has been very viable for a while. And, platinum has been kind of a sideways market for months, though in a very wide range. So I think, I'd be a buyer if we kind of retested that 900, 950 level.
Yeah, and it looks like we could do it. And this is another one of those tariff markets. We talked about this before, which could, cause momentum one way or the other.
Absolutely. Well, Jim, it's been fun.
It has been fun. Every time I talk to you, I have like 1.5 million questions. We should do an extended one of these days, so I could ask all my questions because you have so much information. You're so knowledgeable. So I appreciate you.
We will. We'll definitely do that. I like it.
All right. Awesome. All right, folks, we're going to go right into some midday markets. We're going to check out just about every asset class we could think of. Today, another thing we're going to do today, a little bit later, I had some requests for how do you change your fib levels to harmonic fib levels, and then how do you save that as a default? So a little bit later today, this morning, we have some time here. We'll pivot to that, and I'll show everybody how to do it. And I'll explain what a harmonic is. And if you play a musical instrument, you get it. It's in octaves, by the way. I'll give you the punchline. Anyway, appreciate everybody being on the stream. How cool was Trader Kane? Where do we get these guys? They're young, they're cool, they're smart. This is awesome. And gals, guys and girls. When I say guys, it's unisex. Guys and girls, people. I don't want to get in trouble from anybody. Let's start out with the main event. Let's start out with the E-mini S&P. Firmament says, yes, Kane was really good. For sure, man. Bosma agrees with you right there. Okay, we already kind of went over this whole daily chart this morning. We have like a bearish engulfing candle today versus yesterday so far. We're sitting right on that 200 simple moving average. We have a white anchored VWAP that we're trading around, and we've been trading through this white anchored VWAP for 3 days now. So we're sticky right here. It's kind of sticky right now. Sideways, starting a consolidation pattern until it doesn't, right? But right now we do. We're above that 21 EMA. Let's shoot over to the 30-minute chart, and let's take a look at some edgeful stats. So we have, relatively speaking, let's do the math here. I'm going to bring out my ruler. I'm going to go oh no, I already have it out. What am I doing? Jim, you already have one of these. Cancel that. See, I was ahead of myself. All right, I have the high marked, and let's bring it down to the low and just see what the ATR is right now versus the range for today. Today's range is pretty anemic still. It's 39.25. We'll round it up to 40. ATR in general now is going down. Remember, we were tracking 103 a couple days ago for that 14-period ATR. Now we're down to, 93, right? So we're not even 50. We have a long way to go if we're going to achieve an ATR today. The opening initial balance here, that's that first 60 minutes. I'm defining it as the first 60 minutes because that's what I'm pulling the stats from Edgeful for. And it's kind of like, the opening range trade was getting tricky. So we extended it a half an hour just to see what the stats are. And that's why I have an hour where I'm saying this is the initial balance. And so the top white line, you can see the top white line here, approximately 58.34.5. That bottom line down here is approximately 57.97. So pretty much the initial balance range is almost the same as the range of the whole day. Now, the stats here from Edgeful, and remember, that's Edgeful spelled with one L, for a Wednesday, based on a 6-month look back, 82.16% of the time we have a single break, 13.04% of the time we have a double break, and I'll explain what that means in a second, and then a 4.35% we have no break. Now, what does a break mean? It means that we price trades above the top of the opening range or the bottom of the initial balance, or the bottom trades through the bottom of the initial balance. I'm so used to saying opening range. I got a pivot in my head. Now, the way the software is so cool that you could do the same measurements with wicks or with body candles. I choose body candles. So for a single break, I need to see a 30-minute candle close above the top of the initial balance, or a 30-minute candle close below the bottom of the initial balance. And then we would have our single break criteria met. Double break would mean a body close below and a body close above. No break means we won't have a body above or below. We might have some wicks, but we won't have a body. And that's only at 4.35%. And today is kind of a sideways day. So I don't know. Small range day. I know we're driving down to that Jax 1 level at 5,800, which is kind of acting like a magnet right now. I was telling this to Tracy. We saw this yesterday. Let's see if I still have it up. Well, the Jax level changed, but yesterday we went right to it at the very end, last minute. It was like, wow, it was like crazy. We had trading the close with the order flow edge guys. We had Snow and XYZ, aka Jonathan, and it was magical. And it happens a lot of times. These really important gamma levels, gamma exposure level 1 is the most important one, right? 5,800. And sure enough, we wick through it once. We almost got to it the second time. We're trying to get to it a third time, and a lot of times it acts like a magnet. So, and the volume profile here is kind of not that great, right? You have, I shouldn't say not that great, but you have a decent amount of volume above the kind of the bulk of the value area down here, where that point of control is sitting at 5808. This may or may not mature as time goes on. We'll see. But right now it's a little wonky. And I have this volume profile. I have it set for the beginning of the session. Now, you could also do I'll call it an anchored volume profile. I don't know if that's a thing, but I'm going to make it a thing. I'm going to right click, and we're just going to go to drawing tools, and I'm just going to select order flow volume profile. And then I could just kind of start it anywhere. So if I wanted to start it from the 9:30 to 10 o'clock bar, click and click. And now I have it looks real similar, but it's different, right? This is just a volume profile since the New York Stock Exchange bell rang, right? So, and it could be kind of handy, right? Especially if the paradigm changes, especially when you get these double distributions where, okay, this is what happened overnight. This is what happened in the London session. And then boom, you could kind of move down here and then kind of see what's happening now. All the news is digested, or a lot of the news is digested. Institutional investors have come and gone. Maybe they're still busy, maybe not. And it'll give you kind of a more precise. Now, the point of control is the same, but this will change over time. So that's kind of, I love looking at that particular view of things. NASDAQ, let's go to micro NASI, 30-minute chart. 30-minute chart. All right, same stats here. There's so many lines today. There's so many targets today. I'm going to move this white text over here to the left-hand side so you guys can see it better. So again, initial balance breakout, same criteria, same rules, same calculations. Single break at 82.61, similar to what we saw in the even the S&P. Double break at 13.04, and then no break at 4.35. So if we don't have a candle up here or a candle down here, and we end up somewhere in the middle, then that's going to be the no break criteria, which is very rare. But it could be indicative of today's kind of small range day, right? Could be indicative of that. So that's what's going on here. Now I talked about double distributions before, and think of like capital B as in boy, right? We have a big volume distribution that up at top where we started the day, right? We started the day with nice point of control at 2460. And then volume weakness, right? I'm going to call this price unhappiness between approximately the high vol level in blind spot 3 all the way down to where the volume picks up again. And that's approximately 2343. We have a second distribution developed down at the bottom here. This is part of this is the double, and it's right around that Jack's 1 level. I'm not surprised. Again, it's acting like a magnet. We had a huge benchmark candle here on the open. That benchmark candle is setting the pace right now. I mean, until we get trading above the piercing line of this candle, that's the midpoint of the candle, and I'll just kind of eyeball it. I won't do the math; it's too complicated for me. But we'll say 2390. Once we start trading above that, all bets are off. But until then, again, I'm looking for places to sell this market at this point. So this is the story. Their double distribution, super important. All this volume happened after let's just kind of move my mouse over. All this volume really happened after the open. Nothing happened before the open down in this area here. And this is kind of where the market kind of pivoted. It's kind of, it's like I call it the new paradigm of the day. And we just kind of move back down there. So, some folks would say, well, this volume weakness, traders didn't like this area before. Why would they like it again? If we drive back up in there, we've seen a lot of instances where it does like cut through butter on the way through if it decides to go back up. But alternatively, if you think about it, you squint your eyes and you're open-minded. The top of the value area for this new volume profile, the lower part, is approximately where my crosshairs is at 2342. We haven't seen it in a while, but that could be this top of the value area could be a destination for the longs. Bottom of the value area could be a destination for the shorts. We have that 1-day min. We've already pierced it, and that's a Mentor Q level. So that's the story of the micro NASDAQ. Let's shoot over to gold. I'm sorry. Did I say gold? Copper. Did I say copper? Crude. How about crude? Third time a charm. There we go. We talked about this with Tracy a second ago. This is a really nice trend up in the crude oil market. I'm just going to draw a loosely fitting trend line here. It's not perfect, but you could you get the point. And by the way, keep in mind, we have British summertime. It's called British summertime. It's on the 30th, I think. I think March 30th. That's when they changed their clocks, by the way. In any event, I don't know why I just threw that in right now, other than my London opening range is off. We went all the way up to that 1-day max again, another area of interest in blind spot 1. Blind spot 1 is more important than blind spot 2, is more important than blind spot 3. And but we wicked up to it. And then we broke back down. We're in the middle of the initial balance right now. Initial balance is probably a little less important for two reasons. One, it's an energy market, and energy, the shadow open of the energy markets are usually earlier. But the other thing to consider is we had that 10:30 news release that Shai talked about, and that was this candle right here. So that makes crude oil a little bit different when I'm looking at opening ranges or initial balances, but it's respecting the JAX 4 right now. Sellers came in and said, no, this runaway wick on this contemporary candle. And, you could say, well, all the stops were run and all that stuff. Sure. But whatever happened. And now we're trading right back at the 0DT, E, gamma wall, and qual resistance. And we have, again, this trend line roughly fitting. I'm gonna respect that, but JAX 1 is down here at 69.50. The last thing I want to say about crude, and we touched on this with Tracy, was at $70 level. That $70 level, it's a psychological level for day traders. And a lot of folks use that as an area of interest, these even numbers, right? Mike Burke's great at talking about this. It's these even numbers. They act as support, resistance, targets, stop areas, and all of that stuff. So I kind of fold that into all these other areas of interest that we're generating on the chart. That's the story of crude. Let's shoot over to the Bitcoin. Again, we're trading in March still. This is a monthly contract. You're going to trade it to the bitter end. It's not like you got to roll it over sooner than later. I know the NinjaTrader software sometimes gives you a nudge and says, "Hey, do you want to you want to roll?" So if you're still seeing April, if you see April, you should probably look at March. We have 24,000 contracts traded so far, which is a decent amount of contracts. It's not 576,000 like we're seeing in the front month of the E-mini S&P, but it's still pretty. It's liquid. It's good. It's good. Best practices: enter on a limit orders. Try to set your profit target as the limit order to kind of avoid the bid-ask spread if there's a slippage for a slow period of time. Those kind of things. But it's very, very, very good market to trade. And again, I have some edgeful stats right here. Let me adjust my range. Low to high right now is $1,915. The ATR is 4,500. So we're way off the pace on the range. We're range bound. We're tight today, but we do have some good levels here. We have this red line up here, call resistance, and call resistance for zero DTEs and gamma wall zero DTEs. We did trade above it. A lot of times in the micro Bitcoin, it moves so much. It's not abnormal to have a 5% move, as an example. And so some of our targets, you need to adjust them a little bit. I think Deli was talking about this morning, right? Kind of stop management and know your marketplace. In my mind, my stop management is going to be different in a micro Bitcoin than it's going to be in a 10-year notes or the E-mini S&P. So it does kind of overshoot some of these targets. And I think we're seeing that. We saw that today a little bit. Nice sell-off here. Put support was not support whatsoever. we blew through that put support all the way down to S1, daily pivot, Jacks 3 down at the bottom here is our last line of defense from continued downside. The initial balance breakout for the micro Bitcoin, again, edgeful, 6-month look back, Wednesdays. We have a single break statistic from a look back at almost 70%, 69.57%. We have a double break percent at 17.39, and then no break again at 13.04%. I'm seeing this 13.04% all over the place. So in any event, we have no break yet, right? We do not have no break yet. This market is trying to break down, though, to the downside right now. And just to remind everybody, if I could pull up a daily chart, let's see if the gerbils in my computer are kicking internet. Bear with me. There we go. Oh boy, we got a black screen. It'll be up in a minute. There we go. Again, that trend line, that trend channel, nicely sloping upward. But today we have, again, from a body of a candle point of view, since previous day was a doji, we have a bearish engulfing. So, we're still above that ADMA. I'm not too worried about it. I'm hoping that trend will continue forward here. Let's pivot over really quickly to the Euro FX. We haven't talked a lot about this lately, but the Euro FX is a great market to trade, by the way. I don't know, is anybody trading currency futures instead of, I see Mark is trading the US CAD. You got to jump on the futures Forex bandwagon, Mark. Good to see you, though. Good to see you. Oh, boy. So in any event, this is a daily chart. Huge rally. This was a double top, this rectangle you can see up here. double top. We pierced it a little bit, and then we kind of retraced pretty nicely down. Retracement again is kind of we're not to the 38.1% yet. We're not to the 21, and then I have my anchored VWAP as well. And again, I anchored the VWAP from the low of the day, the recent lows, right? The recent lows. This is where I drew my fib line also, my fib retracement calculation. February 28th, drew it all the way forward, and that white line is the anchored VWAP. We're approaching it. We still have price separation between it. So we'll see if it holds as kind of an area of support, which I don't know, it might, but we have, we kind of slowing our roll on downside. A big candle, smaller candle, really smaller candle, baby candle, almost a doji, baby candle today as well, low range. So even this market is not immune to this kind of small range, low volume environment. But I mean, I've been around long enough to tell you it ain't gonna last. Things are gonna start moving. So get comfortable, relax a little bit, but they will start popping. Jay Robert traded 60 years ago, ready to try it again. That's awesome. You have one market. This is why there's a lot of reasons why CME's currency futures are better than other Forex markets. It's one exchange. The price is the price. I see the same price, Jay Robert, as you see. Same with whoever's watching this, and whether you're in Japan or the Middle East or wherever you're at, you're going to see the same thing. You're going to see the same order book. You're going to see the same orders. It's a FIFO market, first in, first out. Over the counter, two different over the counter dealers might show you different prices for the same currency pair. So in any event, there's a lot of other reasons why you should probably think about this market. So all right. Let's keep rolling here. I know I promised you the fibs. Hang on tight. Let's just take the 10-year note. Let's look at the 10-year note really quickly. ZN. And if you're brave, you could take a peek at those treasury bonds also. Let me pull up a daily here really quickly. So this is interesting, right? And I'll tell you why it's interesting. I mean, we're breaking down through a long-term area of support, which means the 10-year yield is trickling up higher. And a lot of times this market kind of anticipates things to come. And well, what are things to come? Well, Friday we have PCE. Take a peek at a more recent measure of inflation. Remember, PCE takes a look at 1 month back instead of the PCE you get in, GDP, that takes a 3-month look back. But this is, so that's a Fed favorite, right? PCE is a Fed favorite. And then we have, the April 2nd day, whatever that is. So in any event, we're breaking through my rectangle here, right? We're breaking through the rectangle. We're selling off here. I was surprised at this. Yields right now, let's take a look. 10-year is up almost 5 basis points, which is pretty significant. So I don't know. This market might be anticipating either good news or bad news. Probably. This is an interest rate sensitive market, right? So it's probably anticipating bad news. We'll see how it goes, though. We'll see if maybe we could pound up, shoot back up into the consolidation range. But right now, it's not looking that way. The only thing that makes me happy right now is we have a higher high from yesterday. Just a little bit of a higher higher. I think the low is around spot 0.95. I think today's low is spot 1.212. So a little bit better there. So day's not over yet. The other, what do I have over here? I have a stat over here. Gamma, and okay, this is interesting. Gamma conditions positive. Implied vol for the 30-day is only 5.83%. And then on another note on my chart, I wrote this early this morning. Treasury auction. There's a 5-year Treasury note auction today. I think it's at 1 o'clock, if my memory serves me correctly. Offering amount is 70 billion. Now, this isn't it's not the 10-year, but it does represent kind of the mid area of the yield curve. It probably won't affect price in the 10-year that much, but it's something to keep our eye on, right? We're looking at the bid cover ratio for that. Hopefully that's a good bid cover ratio, and that awards it the high yield are not, from a percent point of view, are not really big, right? That those two metrics will tell us that we have some demand, some appetite for that 5-year note, which then again could translate into the middle part of the yield curve and push us back up. Just the 30 minutes here. We have a really nice volume profile. Point of control is perfectly situated. The buy is skewed to the downside a little bit, but it's still a Gaussian distribution. It's no double distribution. It's a single distribution. Point of control tracking 110 and 15 halves right now. And so S1 is held pretty good. Remember, I talked about this yesterday. I love these pivots. I love these pivots on the financials, on the interest rate products. Pivots are still really important. You can call them floor pivots, daily pivots. These are regular pivots outside of the box. I'm not doing anything unusual. So that's the story of the 10-year. So I think we covered it. If anybody wants to take a peek at another market, let me know. I have a lot of them up there on my market analyzer, and I could pop them up. But let's think about this. Let's find a market that's retracing nicely, and then we'll talk about fibs here. Probably not the stock index. Well, let's see. Let me pick a market here that's not too. What's gold doing? Gold might be good. Let's see. Yeah, that's okay. We'll use gold anyway. We'll use gold anyway. So regular fib. So I'm gonna go up to my drawing tools. And I apologize who was asking me this question, but hopefully this helps. I'm going to click on fib, right? And I'm just going to measure high to low, right? The trend, just the recent trend. This wick up here to the wick down there, and then we see the regular suspects, right? We see the 23.6%. We see the 38.1%. We see the 50%. Now the 50% is not a fib number, but we use it anyway. We have the 61.8%, and we have the 78.6, right? That's all standard textbook levels. You can go higher than the 100%, you can go lower than the 0%. But to change this, I'm just going to double click, and I'm going to open up this drawing object box with some properties in it. And I'm going to go to the right-hand side, and all this stuff is cool. I'm going to click on levels, right? I'm just going to see, this is not 100% intuitive, but once you learn it, you learn it. And I'm just going to click on it. It says edit price levels. I'm going to click. And it's going to give me this dialog box, right? And so what I could do is I could add levels, right? And I could add, let me just remove the ones I don't want. And then I'm going to stick with the zeros in the 100, right? And now I want to add one. So I'll click on add. And then we'll double click, and on the right-hand side, it's activated. And so we're going to add the harmonics, right? And the harmonics are, remember, it's think of an octave on a piano keyboard. There's 8 of them, and they're in 1250 increments. And so we'll add that guy. And then we'll add the next one. 1250 plus 1250 is 25. We'll add another one, 37.5. Add 50. Add, and so on and so forth. Now, once you set it up, I'm going to show you how to save this as well. So we'll add that. And then 75, nice even number. 87.5. Anybody who's been on a lat pull-down machine at a gym has seen these numbers on the actual machine. And there we have it. Oops. Oh, man, I might have hit too fast. Let's see. 12. And a half, 25, 37.50, 50, 62.50, 75, 87, and of course I have 0 and 100. Now I'm gonna hit OK. It brings me back here. Now on the lower right, there's a thing called template. I'm gonna click on that template. And then it gives me some options. Template, save, load, reset. I'm gonna click on save. Now, a couple things I could do here. I could set it as my default. In other words, I don't want the regular fibs every time I draw a fib line on a chart. I want the harmonic fibs. So you would set it as a default. If you just wanted to save it as something else, you just type in whatever you want the name to be. And you can see I've already done it up here, right? These are things I've already saved. This is, edge flow retracements, harmonics. I've already done it once. And then classic fibs. We call it classic fibs. So I'm just going to hit save as default. Are you sure you want to do this, Jim? Yes, I am sure I want to do that. I'm going to hit save. I'm going to hit apply, and I'm going to hit OK. So I didn't change the colors. You could do all that formatting stuff when you have time, but it changes. It's the same measurement, right? I'm measuring a trend. It's the exact same. The only things that are it's not the exact same. The only thing that are exact same is the 0, the 100, and the 50, right? But now we have 12.5, we have 25, we have 37.5. And someone might say, aha, 38.1, 37.5, you're cutting it kind of close. It's the same thing. You could argue that for sure, but again, it's a harmonic fib. 62.5 is the next one above 50. I would call that the next key one. 75, 87 and a half. And so why use harmonics versus regular fibs? Some folks feel like the harmonic fibs, especially probably more on a daily chart, work better. Some people think that, Mike Arnold and those kind of folks that are pretty smart guys, they think that. So anyway, it's totally up to you how you want to set your fib. You can make up your own numbers if you want. I don't know. Never tried that before. But that's how you do it. So hopefully that helps on the fibs. All right, let's get back to where are we at here? We're on gold right now. This is a messy pattern, by the way. Messy pattern, by the way. We have that Jax 1 level right there by the blind spot 2, which is right by the 37.5% retracement, which is interesting, right? So again, 3 areas of interest are converging right there. I'm just going to go ahead and draw my ellipse and just kind of circle that right there. That's a very interesting level. You could see big wicks recently, right? So this candle has a big wick on the top. The next one has a big wick on the top. Next one has a big wick on the top and the bottom. And the next one has a big wick on the top. This is telling me that every time price drives up to that Jax level, that gamma level, in this area of interest here that I have circled in red, sellers are pushing it back down. Now that's after, again, that benchmark candle, that big red candle set the pace for the day, and the pace is to the downside. Now I know we've been kind of trending up in gold. We've been sticky over that 3,000 level for quite some time. Regular retracement is not out of the ordinary, but you can see we had some wild moves here. I mean, from low to high to low to high. So we had some big swings today, and this is the April gold contracts traded about 130,000 contracts so far. Be interested to see how many folks in the chat are trading gold. It's one of the more popular markets. I hate to use the word retail markets, but I'm going to use it. I'm a retail guy. I'm gonna call myself a retail guy. In other words, I'm not managing professional money, right? That's kind of that's the line for me, right? Are you managing professional money, or are you not managing professional money? Drive says, can you add the regular fib? Let me see if I saved one. Hang on. Because I just made this my default. I'll put it over on this side for a quick second. And ignore the overlap for a second. Double click. I'm going to open up my template area. I'm going to click load this time. And there's something called classic fibs. Let's see if this is it. I'm gonna hit that, apply, and okay. And now I'm back to the classic fibs, right? Which is like, I know these colors are really bad right now. I don't have time to go in and change them all. We're running out of time right now. But you could see, 23.6% is at, we're talking 3 ticks away from the 25%. And the same is true with the next one up is the 38.1. And then over here where my ellipse was is the 38. So they're pretty close. Where it looks different is on a daily. Let me pull over to a daily. Well, I won't do both. I'll get the colors right. Next time I'll put them both up. But they're pretty close. They're pretty close. Oh, boy. All right. Where are we at here? All right. Oh, we got old school. It's got some markets. Old school's not shy. All right, let's go. We appreciate that. Let's see. Well, we can start with the YM. Let's start with the YM. Let's let this, I haven't opened this today, so it's going to take a second for the data to percolate into my computer here. So bear with me for a second. It's still thinking about it. There we go. There's the YM. So, again, there's a lot of systematic behavior between the stock index futures. And, there's the four major ones. The Russell usually is out of whack a little bit, as we know. And again, I'm waiting for this data to trickle in, so hang tight. But we're trading above the 8 EMA and the 21 EMA, which is this gold line that's arcing upward, and the green line's the 21. And so, I'm looking for a moving average cross. Now, this doesn't always work to perfection, but a lot of times when I see a cross of the 8 and the 21, it's going to suggest to me that we're rotating up to the high, to make new highs, right? We're moving up. Now, I always like to wait for at least one confirmation candle, because one instantaneous cross doesn't really set it for me. But we're getting closer, right? The red lights are going off. There is a potential for that cross to the upside. The faster moving average is going to cross above the slower moving average if the trend continues, right? And we use the word faster and slower only because faster means it has less data points to calculate. In this case, it's 8 data points for the calculation. And so when there's a new data point, it's gonna move faster. It's gonna change that moving average more than one data point in a longer or a slower moving average, like a 21 EMA, if that makes sense. Let's see if I can get to some intraday charts here. So the Dow, wow. Interesting. Again, benchmark candle. I don't have I wish I had the edge full stats up here. Let me see if I can get them. Hang on.
Mamma mia, that's a spicy meatball.
It is a spicy meatball. Thank you for that, Mission Control. Let's see. Bear with me here. I'm going to try to see if I could find the YM here. And I'll show you what I'm doing. See if it added it. Yep. Let's see if we got it. We do. I'm just going to pull the website in. Why not? Okay. We could do this, right? I won't get in trouble. So initial balance, 60-minute YM, mini Dow, $5 Dow. Never trust a stock index future over 30. That's what I've been told. And so we have this initial balance breakout by weekday, right? And there's a pie chart, super cool. It's for Wednesdays. You don't have to make it by weekday. You could make it by whatever you'd like. There's all sorts of ways you could customize this report, by the way. And believe me, I spent hours messing around here, but it's some really good stats. And it tells us, hey, 82.61%, we're going to have a single break in the Dow today. 13.04, there's that 13.04% again, that we're not going to have any break. And then a 4.35% chance that we're going to have a double break. So, again, I have a 6-month look back. You could customize this to however you want. It's pretty cool, pretty easy to do. More customization down here. And breakout criteria, this is a big one. And actually, Andre added this for me, and I am grateful. It's by candle close. I could change it to wick, right? You could change it to wick, or you could keep it at candle close. I like to keep it at candle close. We're going to save that. And then that's my look. So that's right away. As soon as we have the single break, 82.16% based on a 6-month look back is where we're at. So now I could look at the chart and say, all right, Yes, we have a candle that is closed below the low of the initial balance. Initial balance was approximately 42,930. We have a candle close and then continuation selling as well. So we've met that 82.6% criteria. We've had it. Now a double breaker, good question, Francisco, thank you for that, is if, since we've closed below, if we rally all the way back up, let's say we rally up to R2 for whatever reason, I don't know, it doesn't look likely, but it's possible. R2! Then we have, we have a candle that closes above here. Then we have a double break, right? It broke twice. It broke down here and it broke up there. And so how would I use that in my trading? So here's one thing to consider. Let's say later on in the day, we do rally significantly, maybe up to R1, maybe to the point of control up here, and we're getting close to the end of the day. And so now I'm thinking there's really a small chance that we're going to actually close up. We're going to actually have a candle close up here. So in my mind, okay, maybe if my bias is consistent and my system is consistent and my strategy is consistent, then okay, if I get short then after a rally or retracement back up, we'd call it, then I know where to put stops at, right? And I know I could confirm my bias because I wouldn't expect us to close any higher. I'd expect us to close lower, if that makes any sense. So that's one way you could use it in your trading. There's just so many different reports on this edgeful thing that I'll spend more time on it in this segment. Oh, that was weird. Did you guys hear that? Pull this back down. By the way, the Dow is, wow, it's on the move, man. This is not good. Let me draw a rectangle here while we're at it. Where's my rectangle? I've drawn probably 1.5 million rectangles in my career here at NinjaTrader. I still can't find the rectangle tool. Nice support, touch point, I'll call it. 2 candles. It wasn't almost a tweezer bottom. And now we've kind of wicked through it again. So we have a kind of a double bottom going on right now. And again, if this breaks, then breakout traders are going to want to probably think about getting short. We have that S1 as the next stop down. And then we have previous sessions lows. Unfortunately, I don't have gamma levels for this market, but we do have some really good targets here, just from previous sessions lows in S1. And you can go further down and find S2. Oh, no, I do have gamma levels on here. What am I talking about? Blind spot is way down here. So S2 in blind spot 2 is down around 42,650. It's possibly a next stop down. So this just might have blind spots. I'll sort this out. But with Fabio, we're gonna have Fabio back on, by the way. That guy's awesome as well. Oh boy. Uh-oh. Dan's talking about Trump tariffs for automobiles. Uh-oh. Here we go. The dust is not settled yet. Let's see. We talked about CL already. Old school. We did gold already. Platinum. Me and Tracy covered platinum a little bit as well. You're picking off, other than the YM, you're picking off the tariff markets. I like it. Expecting that price action to come in for sure. So while we're on the YM, let's just finalize this analysis here. Let's just, again, I'm going to just see what the range is today using my ruler, high to low. I didn't get it to the tick. Close enough. 338 points so far. So this is, there's some range here, right? The ATR is 638. So 631, I'm sorry. You could see it right here on my upper market analyzer on the upper right. So again, we haven't fulfilled the range. We should start talking more and more about commodities. That's a great question. Any ideas on what wheat futures looks like? Yeah, I mean, there's going to be some tariff sensitive stuff going on here. and war in Ukraine, sensitive stuff going on. In addition to, we're entering the planning, in here in the U.S. anyway, the planting season is upon us. We're transitioning from old crop to new crop, and then we have a nice double bottom here in a daily so far. Moving averages are all arcing downward as well. But this could move a little bit on the whole situation in Ukraine, in Russia, and also on tariffs, believe it or not. So keep that in mind as well. And then you got weather to worry about. We got a resident weather guy though in Leo. He'll tell us he'll get in his car and drive through the tornadoes. Whole nother story. Appreciate everybody being here with us this morning. We covered a lot of ground. We had a lot of fun. We did a lot of work. Trader Kane, right on, brother. You were awesome. Looking forward to seeing you again. We're gonna be back here at 2:30 with some more of the order flow, guys. So until then, look forward to seeing you soon. Take care. Thank you.